Hey, Oscar.
All right. Well, good afternoon, everyone, and welcome once again to the Core Connects KoreSummit webinar series. Today, what an exciting topic. If there's ever a controversial topic, cannabis is definitely the one. And one topic that we've been waiting to do for a long time because, let's face it, it is a business. It's definitely gaining a lot of momentum. And just to be clear for everyone that is either here today or watching this live webinar on YouTube or any live event right now that we have it in, we're not here to talk about the use of it or it's for the companies that are engaging in legal business who are looking to raise capital for their business, and there are legal venues and regulations to allow them to do so. That's the beauty of it. The SEC does not discriminate cannabis. In fact, there have been many successes on that subject. So it's really important that we mention that. I did get some feedback from some people. Oscar, are you having one of those events where everybody's smoking? No. We're here to provide an overview how a cannabis company can use the regulation in order to raise capital for their company and be able to do so in such a way that it can then gain the momentum of having new shareholders in their company and raise the capital in order to build their business. But what it's not here to do, it's the other stuff. So hopefully I put that. I knew everyone here, you weren't expecting that because obviously we have lawyers that are going to talk about the regulations. As always, our format. We talk about the preparations first, we get that going, then we're going to have the investor acquisition providers who are going to help you. We got a little sneak peek in between there. I'll tell you a little bit about that. And then we're going to talk about what happens when the offering is live. And then, of course, secondary market trading. That's right. Providing, the venue for investors to monetize without actually going public. Not everybody needs to go public right away. You don't need to do a reverse takeover, a CPC in some sort of Canadian exchange, or get listed on NASDAQ overnight. No, not at all. In fact, the whole key here is build up your business and get it ready and mature enough so you can move forward. So it's really exciting for me today because, as most of you know, I'm Canadian, and we are one of the few countries around the world where cannabis is a legalized business all the way through across the country, and obviously it's flourishing. In the United States, obviously it's legal in certain states, but the market is growing very, very big, and obviously companies need capital in order to grow their businesses. So with every one of our core summits that we have, we like to start it off with someone who can bring you an insight into the sector that I can't. I know it obviously from reading and understanding some of the intricacies, but I am so excited to bring on this speaker that's going to lead us off this afternoon. Most of you in the cannabis sector probably know Jordan Lambs, as the CEO of Moxie. And he has been a veteran in the space, and what his company's been doing has been phenomenal. But more importantly, it's this knowledge of the sector that's really the key. And that's the most important thing. He's going to lead us off this afternoon by giving everybody an overview. What is the cannabis sector? And what better person to do that than Jordan? Jordan, you're there?
I'm here. Can you hear me?
You bet. It's great to have you. Looking great. So as I said to you, everyone, I've learned a lot from you and in our discussion. So, and one of the things that I like doing is keep on learning. And I think today our audience is eager to hear you. And please, the floor is yours. Enjoy.
Well, thank you. I'm very honored to get to open this up, especially considering that I haven't gone through a complete reggae cycle myself yet, but I've been lucky enough to get immersed in this world, this community that it really is, and be so wonderfully educated. You know, Oscar, you and your team especially are kind of like the hub in the middle of the spokes of this reggae universe. And, you know, between yourself and some of the other speakers that are going to be out there today, you know, Sarah, Eitan, Sherry, Joel, like the wealth of knowledge and the willingness to share it reminds me actually of the old days in cannabis. When the industry was first starting, it was, you know, only really done through grassroots efforts of entrepreneurs. And there wasn't big finance. There wasn't the Canadian capital markets. There wasn't hedge funds. It was just people that knew what they wanted to do and did it themselves. And reggae reminds me of that because everybody's helping each other. It's a mentality of, you know, a rising tide raises all ships. And as cannabis has grown up and come into the light of day for all the benefits that brings of, you know, legalization, regulation, you know, normal people being able to have bank accounts, which is, you know, a new thing for us. The spirit has changed though too, and it's become incredibly competitive. And so as I was contemplating what to talk to everyone about today, just to kick this off and try to get the right tenor for everyone that might be, you know, exploring the reggae world for their first time as a potential for their cannabis business, which I'm a firm believer in, and this is an incredible option. A very close friend, advisor, and colleague said to me, just evangelize. He said one word, evangelize. And like I laughed at first because it seems very radical, but it also seemed like to fit perfectly because it's just like when you get into this in the same way that I felt when I first got into cannabis, for everything that it could do from a business perspective, from an economic opportunity perspective, from, you know, the medical aspect, it makes you so passionate that this needs to be put out there. It needs to be, you know, spoken about, and people need to be made aware that this is an option to them. And that same spirit that I had in my earliest days of becoming a believer and an entrepreneur within the cannabis industry is the same way that I feel about the world of reggae. And, you know, luckily the people that I've encountered, you know, all across the whole, you know, system have, you know, resembled that, like mirrored it in such a refreshing way that I haven't seen in a long time. And that being said, you know, there is some interesting stuff that's going on in cannabis today. There's a toxicity that exists within this industry. And, you know, I believe a lot of that stems from the way that the industry has been capitalized. You know, this industry went from 0 to 100 really fast, and it's still got a long way to go. There's still a huge journey ahead of this industry to get it, you know, call it into the light of day. But along the way, what's happened is that there's been so much capital that's been needed. And for lack of a better way of putting it, there's been corners that have been cut throughout the various opportunists that exist within this ecosystem to get the business capitalized and on its feet. And what that's done, you know, a lot of great, you know, the industry's grown up. There's been lobbying efforts that have put forth legislation and regulation. And now there's, you know, more access to good quality product throughout the world than there was by many exponents just a few years ago. But with that has come an ecosystem of financial engineering that has largely not benefited the customers, the entrepreneurs, or the industry at large. And the reason I say that is because, you know, to facilitate the large flows of capital, there has to be good returns and big returns. And with that opportunity for big returns opens the opportunity for impropriety and bad acting. And what I've seen happen, you know, time and time again, and have experienced even, you know, a lot firsthand, is that there's not so much an interest in investing into the space as there is an interest in gambling on the space. And what that does is it creates a lot of big flow of capital. But in entrepreneurs, so many in cannabis come with, you know, a true belief and commitment to doing something bigger than just generating financial returns. And that's what makes their businesses so great. That's, you know, empirically what makes great businesses last, is having a mission that's bigger than the financial component. You misalign interests. And in that misalignment creates compromises, oftentimes on behalf of naive entrepreneurs, that everything's going to be, you know, rosy and rainbows, and it's just frankly not. You know, when you add an immature market with businesses that are largely immature and not fully professionalized, and pair that with a system of capital markets that's designed to recycle capital for quick and large returns, it invites a lot of bad things to happen. And what is really cool about the Reggae world, and not only in the timing as it relates to our industry and cannabis, because both are kind of growing up at the same time, but it feels very full circle to me. And not to be exclusive to our friends north of the border in the room here, but I always have used the saying since the beginning of the opportunity in cannabis, and that's that this opportunity represents the American dream without it being at the expense of America. You know, in so many other industries, you have such a great opportunity, but it's almost as though someone's always losing, you know, whether it's, you know, overseas manufacturing where labor practices are abusive, or whether it's something that comes at the expense of the environment, which is most industries in some capacity today, cannabis not excluded. There's always like some, you know, behind the curtain detriment that always makes you scratch your head down the road of like, okay, well, is you know, the juice worth the squeeze? And the cool thing about cannabis is I've seen it, and it's got a lot of work to get there, but it's one of those industries that has that opportunity to make everyone win. You know, not only do, you know, the governments get their big piece and through a sustainable tax, you know, regime actually be able to make good money for local and larger governments, but the entrepreneurs can create great businesses where they can generate wealth, and ultimately the customers don't have to pay the price. But we do have some work to get there. And the reason that RegA, I think, rounds all of that out is because now, not only is it not at the expense of America or the, you know, the average person, now it can be even beyond the product itself to the benefit of that average person. Imagine an opportunity where you can not only create access to something that people really not only either deserve, but maybe in a lot of instances need in their lives to live fulfilling, high quality, you know, lives and daily experiences. But now they've got the opportunity to share in the upside of when those businesses succeed. And the outset of this, you know, new paradigm that we're looking at reminds me just so much of the original paradigm shift of cannabis and healthcare to begin with. You know, no longer is this about trusting in the old institutions of that, hey, you're this one person, and you've got this one ailment, so you got to take the same drug that everybody else, you know, all around the world takes for that because that's what's accepted. And you know what, if it doesn't work for you, good luck. And similarly, oh, you're a unaccredited investor and you want to build some wealth, and so here's your couple options that are frankly largely a crapshoot to do anything within a finite period of time to improve your financial independence. And RegA, when done correctly, particularly within such a, you know, high growth industry like cannabis, can kind of like complete that 360 circle of like, now you get to share in a democratized version of the upside of these businesses that you can pick for yourself what you're investing in, and you can do it before it becomes completely gobbled up by the old guard. And, you know, let's be frank, you know, when the big banks in the United States get involved in cannabis, these opportunities will be, you know, fewer and farther between in the, you know, breadth of the opportunity that they represent to normal retail investors. And so that's why I say the timing here is just like so serendipitous, that where the industry's at and how now everyone, you know, largely within the industry has become somewhat disenfranchised with the manner in which the industry has been capitalized. And then at the same time, there's a sunset coming to this starvation of capital, and that I think most believe sooner rather than later that there's going to be federal reform within the United States, which will open the floodgates to a lot of different, you know, types of capital flowing in. But then at the same time, you've got RegA that's over the last couple of years gone from this, you know, almost like fringe thing that people didn't understand and maybe even didn't care to understand, to now something that cannot be ignored. And the reasons for it, I think, are great. You know, it's an opportunity for entrepreneurs and businesses to stay focused on what it is that they need to stay focused on to adhere as truly as they can to their core values, but then to reward those that actually believe in that financially and beyond. And, you know, just like anything, it's got its growing pains to grow through. But, just in the last year of my experience being in this kind of ecosystem of RegA, I've seen it grow up so much. And it gives me such a significant level of excitement for the next couple steps. Now, let me temper all of this on both sides of the cannabis and the RegA coin by saying cannabis is one of the hardest industries ever. And that's not just me as a lifetime cannabis entrepreneur saying that. so many of my colleagues and peers within the space that have come from other industries share that sentiment, and that it's just super challenging. And Reggae is not the simplest of things either. There's a lot that you have to deal with when it comes to the audits, what KoreConnex does with the transfer agent services on top of all the other suite of services that they provide, the actual investor acquisition piece, all of the broker dealer compliance that goes with it. It's an interesting web of things that have to be managed and balanced that I think most entrepreneurs are not familiar with. And as someone who's learned it all within the context of the cannabis industry, you're pairing two complicated things together, but I'm here to tell you it can be done. And if you're considering it today, and this KoreSummit that you're going to sit through and get such an incredible amount of knowledge from all of these experts is exactly how I got my start of education within the sector. And it's going to be the best crash course you can get, because it may be a little complicated, and particularly at the beginning, it's daunting, but all you got to do is start just loosely untangling that knot. And sooner than later, you've got straight lines of string that you know exactly how to get from one end to the other. And when you get there as an entrepreneur, it's one of the most empowering things, because not only do you know that you get to bring that benefit back to normal people, depending on how you want to structure your offerings, but you get to keep all of that in line with, the value set that you and your team police and adhere to every day and protect, because that's the culture of your business. And I think that's probably one of the most important things about this, is that this is about protecting the culture and then rewarding those that help you do that. And so today, as you listen to all of these experts, and you're going to get such a wealth of knowledge about the Reggae sector. Don't be afraid. It's scary at first, but if you feel that compulsion, that urging that this might be something that's there for you, particularly if you're an entrepreneur in the cannabis industry, you're going to grow up so much as an entrepreneur outside of the auspice of cannabis, while protecting that spark that you have, being in one of the coolest, most important industries in the world at this time. And this marriage to me is just, it's serendipity. It's a match made in heaven. And I encourage everyone that's out there that's considering this to really, take this resource today to heart, because it's so unique. And just to kick it back to Oscar, I have so much thanks to him for everything that he's helped me with on my journey as we embark upon a couple different Reggae offerings within the cannabis sector. And we're very excited for the results and to share that with everyone else out there. So Oscar, thank you so much for letting me kick this off for you guys. It's truly an honor.
You know what? I couldn't have asked for more. I think it's a great insight you brought into everyone, giving them the hard truth of that it is something can be a little bit painful, but in the end, you get to retain that brand, that spark. I like that word. I really do, because you hear me all the time how I feel about the Jobs Act, right? I love it because it's democratization. We're in the driver's seat, and we need people you're going to hear. I'm going to introduce here very quickly, but we need them. They're going to help us get there, but gives us a greater responsibility as well. And that's not a big burden anymore. It's a lot easier. Thank you again, Jordan. I know we'll be talking again soon. Now we're obviously very excited we're going to bring our next set of speakers, because, it's like everything else. It moves through a process where we are going to, provide that education to you in a very seamless kind of way, where you can actually see what's going to happen as you put all this together. So what does that mean? Well, there's a process on how it all gets started. And people like Jordan went through it. They begin the discussions with, we call them the people for the preparations. They're those who do the stuff that nobody else sees. We're the ones in the background fighting it out and trying to make sure that it'll work for you. And this is what's exciting. So I'm bringing on these individuals in particular, Etan Butler, which I'm sure you've seen his name constantly associated, not just with cannabis, because he is diversified like all of us, but this is an area that they've had tremendous success. And of course, I hope it goes without introduction, but for those who are new to this, you're about to meet two of the leading advocates, both from the legal side, but also from the sector, Sarah Hanks and Marty Tate. And I'm going to apologize. I did forget one. See, It just takes me a minute or two. I'm a little slow. It's Wednesday, right? It's Wednesday. There we go. So to get things kicked off, and you heard Jordan. I don't know if you guys were listening to. I'm sure you were. I like the way he said it. I don't know if you were following, and you guys have probably seen it more than all of us, where there's a pain that sometimes companies feel like, oh my God, what did I get myself into? But I like the way he says it. The pain is to maintain your spark. I love that, right? We've always said the pain is so you can maintain your, the control or your company. And so, ladies and gentlemen, this is the first pain. The preparations. See, you guys like that. All right, Lee, you're going to kick us out to our next panel. Have a great time, everyone. Thank you again, and enjoy the series.
Apologies, I was on mute. Thanks, Oscar. Appreciate that. My name's Lee Seba. I'm the head of market structure for Rialto Markets. Apologies, you're not getting the prime candidate here. Our CEO, Sherry Noonan, I'm pinch hitting for her. Something came up last minute, so apologies. You get me instead. So sorry. I'm sure we'll still have a great panel here. So again, Lee Seba, head of market structure for Rialto Markets. We are a broker dealer registered in all 50 states, and we help with primary raises and secondary trading. We have a registered alternative trading system, or ATS, that can facilitate not only just the onboarding, which is the primary, but also the off ramp if you want to exercise those shares that you buy. I guess, and with that, I'll hand it off to Sarah.
Hey. Hi, thanks, Lee. I'm Sarah Hanks. I am CEO of CrowdCheck Inc. and managing partner of CrowdCheck Law. And between the two of them, we have complete range of legal, compliance, diligence, disclosure services for all of the online exemptions under the Jobs Act, including RegA. And we have done, I think we have qualified 111 RegAs so far. So building on it. Over to Eitan next.
Hey, thank you. Marty, good to see you. Sarah, Jake, and Oscar, thank you so much for putting this all together. I'm Eitan Butler. I'm the chairman at Dalmore Group. We are a FINRA and SEC registered broker-dealer investment bank. We're headquartered in New York, and we were founded in 2005. We've been pretty active on the RegA space over the last few years. We currently have, I think, over 160 RegA clients, including many of the more successful RegA offerings that have been done. And interestingly, for today's topic, I just looked at the previous offerings. Over 10% of our RegA offerings have actually been cannabis offerings. I think it's close to 20 cannabis offerings. So look forward to kind of unpacking that and talking a bit more about the process.
Hi, I'm Marty Tate. I'm a securities lawyer. I'm based in Salt Lake City, and have been involved in securities offerings and the online exemptions, like Sarah referenced, basically since the beginning. We specialize in RegA offerings, Reg C offerings, 506C, and work with a number of the platforms and broker dealers as well. So happy to be part of this. When Oscar asked if we could do this, he said, well, you're based in Utah, you probably can't do anything with cannabis. And I said, oh, I don't know if that exempts us, but we've worked with lots of cannabis companies throughout the years. So
Great. Thank you, guys. Thanks for the introductions. So I guess just to roll right into this, what are issuers need to think about when deciding to do a RegA? What sort of information that they need to provide? What will be public? What won't be public? Just from your experience, and obviously you guys have a wide breadth of experience. What do they need to know?
Um, well, some of the things that one of the things they need to decide very early is make up your mind about everything before you actually start the process, because there may be implications even with respect to the audit that's needed, depending on what you're selling and how you're selling it and who's selling it. But I just wanted to start with one kind of interesting aspect of RegA with respect to the registered offerings. RegA really is the only show. It's the only show in town for cannabis companies, and part of that is because when you do a registered offering with the SEC, that's the full thing where you go on to list on an exchange. In order to sign off, the SEC has to make a finding of doing so being in the public interest. And it's difficult for them to do that when something is illegal in certain states. And so from the very beginning, they've been like, yeah, it's under RegA, we don't make that finding. And so RegA is sort of more the natural home for primary capital raising. But that's one of the biggest things is start off with what you're selling and who's selling. So for example, is it a primary offering where just the company is selling? Or is it going to be partially a secondary offering where some of the shareholders are cashing out? And some of the analysis that goes into that that decision includes, how long you've been operating. Is it going to? Are investors going to think it's fair for a company to be recompensing the selling shareholders in this way? Have they been at risk for a long enough time? For the first year that an offering that the SEC, that the company is using Regulation A, only 30% of the offering can be made by selling shareholders, and there is a permanent upper limit of offerings for selling shareholders of 22.5 million a year, compared to the upper limit for the companies of 75 million a year. So some of the things that that's one of the things to decide. Are they going to be selling shareholders? Next one, of course, is what are you selling? If you're a newly formed company, have you actually formed the entity? And have you decided whether you're going to be a C Corp, whether you're going to be an LLC? Are you going to offer economic rights only with no voting rights? If you do offer voting rights, what are they going to be, especially compared to the founder? You're going to have to decide things like audit. If you must provide 2 years of audited financial statements if you have been in existence that long. Sometimes we see companies say, well, I'm actually going to create a completely new entity here because my financial statements are completely messed up. And that's never an answer, because the previous business is going to be a predecessor to the issuing company. So there are no shortcuts around this. If you've been in existence 2 years, you need 2 years audited financials. And one thing with respect to Canadian companies that I wanted to flag is you can use either International Financial Reporting Standards, IFRS, or US GAAP for the financial statements, but the audit has got to be done in accordance with US GAS, US Generally Accepted Auditing standards. So you can't use Canadian auditing standards, even though you can use Canadian accounting standards in keeping the records. So those are important gating issues. Otherwise, I'd say when you're planning the offering, and Eitan's going to talk about all of the players in this game. But one of the things that's really important is making sure that all of the players know the publicity rules. What you can say and where you can say it differs depending on whether you are qualified yet or not. And so your lawyers are going to be telling you what you can say and how you need to deliver offering circulars and the like under certain circumstances. But make sure that everybody knows there are rules. You don't have to test them on what the rules are, but you have to make sure that everybody playing is aware that there are rules about communications and that they need to sign off with both the lawyers and the brokers, because the brokers have a skin in this game too. And then the final thing I'd say is a gating issue in deciding what you're doing is, do you have any material contracts that you don't want to disclose? Because any contracts that a company has with its own management, related parties, or contracts that it is fundamentally dependent on are going to have to be filed with the SEC and are going to be available to the public. And so if that's going to be a problem, decide on that now before you even go down that path. There are some things you can redact, that is, cross out before you file, but not a lot. And this has got to be one of your absolute gating issues.
Great. Thank you, Sarah. And just a quick follow-up. I mean, obviously, this panel has a lot of experience with that. If I'm a new company and I'm starting out and I want to raise capital, obviously RegA, as you pointed out, Sarah, is probably the only game in town, given some of the friction in other states. And there's a whole host of other questions. What is there a guideline or a series of sample questions for these folks to ask themselves before speaking to yourself or Marty or Etan?
That's a really good question. I mean, we have a sort of guidelines to RegA that we usually give to people after we've already talked to them to make sure that they know what they're getting into. But we don't have a sort of filter. We just expect that the people who introduce the companies to us will have gone through some sort of filtering process. If we get a lot of introductions on, say, LinkedIn, and in that case, when there's a conversation, some of the things that we're discussing at first is, are you actually qualified as an issuer? Are you Canadian or US, and actually managed from Canada or US? Are you definitely not a investment company? That is, do you have any minority holdings in a whole bunch of other companies? So we kind of do that off the fly. I don't know, Marty, if you've got like a sorting out or filtering list of any kind.
No, I typically we'll kind of do the same vetting. I know that when we start with a client, like once we've gone through that initial, introduction and verbal and vetted some of those questions, then we'll get into, and I think you have something similar, but we have basically a due diligence questionnaire where we'll have them provide all of the information. And this goes more to the process, but that's our very first step. Once we decide this is a fit, is we'll go through and we'll have them provide us all of the necessary information we're going to need to, as well as the corporate documents and so forth that we're going to need to start preparing the documents. One of the things that that Sarah brought up that I think is important with respect to cannabis is not only location and where you're located, but with cannabis, it's the structure I think becomes really important, because a Canadian company, with a RegA, it's less of an issue, but there might be issues on if they're, what services are you a service provider? Are you actually touching the plant? And that gets into, there's some licensing issues that you might need to start thinking about if you're going to have, certain states require disclosures if you have more than a certain number of investors. So one of the things that we've talked about with clients is, maybe we structure, is there like a non-licensed holding company that sits above that might be the better candidate for the RegA versus, another company, or is there licensing or leasing structures that you could put in place that could help with that? So that's just another thing that is a gating question, kind of asked, what does the actual company do in the cannabis space, and what are the possible hurdles that we might have to address and look at, as well as what are the risks with that.
Mm-hmm. Great, thank you, Marty. So Etan, we're going to point to you now. Can you give us a rundown real quick of the various service providers that are required for RegA?
Sure. So once you are connected with Securities Counsel and you know what you're looking to accomplish is possible and compliant from a qualification perspective. You're going to want to surround yourself with a team of providers that hopefully have done this many times before at a high volume. And that includes a broker dealer. That includes, ultimately, you have some choices as far as technology, escrow payment processing as well. Transfer agents is an important component as well. Obviously, we talked about the auditor, right? You're going to want a cost-effective auditor that has time for you. That's going to, because oftentimes that could cause a delay if they don't. And then you're going to want to, and that's going to give you a strong ship to launch, right? But that's it. You're still going to be, provided you run your offering on your own domain, you're going to be all of a sudden alone on an island with an invest now button. Now what? Okay, so I just made an investment in being able to raise up to 75 million a year from anyone over 18, but great, congratulations. How are you going to get people there and interested to click on invest now and put their credit card in and sign a subdoc? And that's a very important component. And that's probably what you're going to be spending as an issuer most of your time navigating through, things like return on advertising spend, promotion, distribution. There are some things that are unique from a cannabis perspective as it relates to certainly the broker dealer's involvement with cannabis issuers for Reg A. So investing in cannabis companies is not illegal as long as the issuer is domiciled in a state where cannabis is legal, and as long as the issuer has proper licensing, right? And in situations where the cannabis issuer is touching the plant, then we are required to file specific SAR reports. Those are suspicious activity reports with FinCEN, noting that we're engaged with a cannabis issuer. We perform additional due diligence, like verifying that the issuer has the appropriate licenses in the states they do business in. And then there's unique ongoing requirements from a BD level with regard to requesting and collecting, current licenses, applications, related docs, anything submitted by the business for obtaining the state licensing to operate a cannabis business is certainly for part of our due diligence process, as well as, requiring write-ups of the normal and expected activity for the business, right? The types of products to be sold, the types of customers to be served, whether it's medical or recreational. So these are unique to cannabis that kind of are involved in the process. I think it's important for companies that are considering a crowdfunding effort, a Reg A to raise capital for their cannabis company, to recognize that this is already being done. On our side alone, on Dalmore's side, we're approaching $200 million being raised for our cannabis issuers just over the last 2 years, including a number that have hit the full 50 million, 46 million, 30 million. And we have as far as new issuers that are launching now or awaiting SEC qualification, there's over $500 million on our side, cannabis offerings that are about to come to market. So clearly that's indicative of the cannabis community being aware of and utilizing Reg A to broadcast their opportunity to their existing customers, fans, followers, subscribers, as well as to the general public who perhaps for the first time are presented with an opportunity to participate in a very unique market right now. And I think we're going to see that continue. I think we're just at the beginning of that.
So it sounds like the process sounds daunting, but as you described, it's very possible, and lots of people have had success with this, or lots of companies have had success with this. I think you mentioned, Eitan, that 10% was it of the companies that you've helped raise capital?
Yeah, it's close. It's about 20. It's about 20 cannabis companies, right? So I'd say like 7 of them have completed their offering. There was Gage, and by the way, this is not a recommendation to purchase any securities, and past performance is certainly not an indication of future success from an issuer's perspective, and certainly from a investor perspective, but it's publicly available. Gage Cannabis, one of our clients, raised $50 million in under 3 months, of which over half of that 50 million came from institutional investors. So that's what we're seeing now. We're seeing not just startup cannabis companies, but we're seeing companies that have ambition to go public. that are structuring their offering to be of interest potentially to institutional capital, right? We have Flora Growth, who raised 30. They are now listed on NASDAQ. Gage, by the way, was recently acquired by TerraSend Corporation for $545 million. So these are successes. These are wins for the cannabis industry that have used RegA to promote their brand and raise capital for their offering at the same time with going public ambitions. Juvalife, that raised 18 with us, is trading on the Canadian exchange. And so I think that's where this is going. Larger raises for not necessarily just startups, but for companies that are choosing to raise that $20 to $75 million piece prior to going public from the general population at a structure and at a valuation that they want to bring to market, rather than knocking on Wall Street doors or VCs.
Eitan, the company that you referenced, I didn't catch the name, that's listed on NASDAQ. Are they a US or are they a Canadian company?
Juvalife, so the one I mentioned was Flora. They just listed on NASDAQ. Yeah, Flora Growth. I think they were. I don't know exactly where they're based. I think it's Canadian based.
Yeah, that would make sense, I would think.
Yeah, a health and wellness, kind of pharmaceuticals focused consumer product company. And I think that's certainly trending from our perspective. And I think I think it's giving issuers awareness and the confidence to understand that there's a market, there is investor interest out there, retail and institutional. And one of the benefits of RegA is that, for those who have an interest in making secondary trading, available, there's no restriction period like there is for Reg D or Reg CF, where you have to wait a year for seasoned paper. Reg A, once the offering is complete, you could, subject to how you structure it, you could make those shares immediately available on an ATS. We haven't seen a lot of that interest yet for cannabis, like we have for kind of collectibles and fractional investment in different assets. But I imagine we will soon. And I think that's going to be interesting, to watch as well.
Yeah, I agree. Yeah, that was great. So obviously this process is a little bit involved, and there's some preparation as part of it. Marty, can you talk a little bit about like the timeline, what the expectations are for an issuer, from start to finish in this process, and sort of what they should mentally prepare themselves for?
Yeah, mentally prepare themselves for a lot, I think. It's the timeline really, it depends, and I hate to give any sort of solid timeline, because so much of it depends on where the company's at, how prepared they are, what their situation looks like, and then the type of offering. But I think a optimistic, and maybe Sarah is quicker, but I think somewhere between very optimistic is 3 months, and more realistic is 6 months. Especially with a cannabis company, I think there might be additional questions, but if they're well organized, if they have the audit in place, if the audit's clean, if there's not a lot of questions there, and it's a simple operating company, there's going to be less issues to address. So I mean, optimistically, you could do that, on the shorter end. The process, the way that we do it, and I suspect others, is as soon as we're engaged, like I said, we'll start by sending, requesting information. At the same time, we'll have them reach out to their auditor. It's important that the auditor starts working on things immediately on the audit is at the same time, so that we're not, we don't finish our part, we're finished the offering circular and ready to file, and we're waiting on the audit. And then once that's filed, there's, the SEC has 30 days, to get back to you, and provide comments. And then, it's kind of a 2-week process. If you're being prompted, the SEC has 2 weeks thereafter to respond to any amendments. The other important thing, and Eitan can speak to this, is that the broker dealer has to be approved by FINRA. And we're finding that that's taking a long time with some of the broker dealers, that not necessarily super long time, but it's taking longer than it was initially. And I don't know if that's just backup number of RegAs that they're trying to deal with or not. But Etan, have you found that, or is that just unique to maybe some of the other broker dealers we've worked with?
Maybe unique to some of the other BDs you've worked with. I guess, what I hear from our compliance team is it has to do with how busy FINRA is. It has to, how many stacks are going on, which examiner you get, how busy they are. Yeah, I think it's like there's a human component to it, and FINRA doesn't have any requirements to answer to anyone or get back to you with timing and updates. Right? They take their time, and you say, "Thank you, sir. Could you please take a look at this?" And sometimes they'll say yes, sometimes they won't. But it goes in trends a bit and a bit of cycles. Yeah. I mean, I think we've been keeping corporate finance busy a bit recently. I think that with the increase in RegAs, they're growing too. So, but I wouldn't say that we've noticed a difference per se. In fact, we have seen more recently, and I don't know why, these kind of like no review, kind of limited review type, very quick qualification, and sometimes very quick no objection. I think that sometimes, and this is just speculation, but perhaps if the company has been going for a while and has revenues, as opposed to it being a startup, maybe that has something to do with the approach in some way. But I think that's one of the reasons why it's important to have the broker dealer be prepared to file the offering with FINRA right after Securities Council files with the SEC, because then it becomes an overlapping process, right? And then if it does take an unusual amount of time with FINRA, okay, so it's going to take what, 60, 70, I mean, it could take endless time and it could take very quick, but as far as from an average perspective, we like to say, for whatever it's worth, at least based on what we've seen, be prepared for, the SEC process to take, 60, 70 days plus, right? If you're lucky, it gets earlier, but have the BD start the process with FINRA right away, the day after you file, right? And then maybe you'll get the no objection first, maybe it'll be around the same time. But I think you're right on the timing, right? There's a month at least to kind of prepare with the Securities Council, and then there's the average time it takes once they submit the initial 1A until on average qualification. So that 3 to 4 month type process on average, and there are exceptions, is a fair kind of metrics to use for sure.
Yeah, I guess the question, we've just had a couple recently where we've cleared comments and then just been waiting for FINRA to give the no objection letter. So but yeah, I think that's a good estimate. And again, it really depends. There's a little bit of luck of the draw, even with your SEC examiner. I've had issues raised in comment letters that are brand new, I've never seen before, and we're saying the same things that we've said in other offerings, and now they're asking questions about it. So there's a little bit of that roulette aspect to it as well.
Yeah, I know from my experience and just studying some of the filings, the team that you assemble up front should be of high quality and familiar with this process, because if they're not, you can kind of see this back and forth for long periods of time, and the time to get approved some of these go a very long time if you haven't, your cousin Sal, the real estate attorney, might not be the best person to consider when going through this process. So it's, choose wisely. The folks in the middle is what I would say.
It's a good point, Lee, because I think sometimes we've been brought in part of the way through the process to kind of as emergency assistance, because the SEC speaks a very specific language. They'll say things like co-issuer, and you have to know what they're talking about in order to answer. And so we've seen several times where, there's been rounds of comments where the SEC raises a comment and then the company files a non-responsive answer. And what the SEC is looking for, and the SEC isn't getting it, and they don't know how to communicate to the company. This is what we're looking for. Talk to somebody who speaks our language. So it is really important to have somebody who knows who speaks SEC.
Yep, knows the handshakes.
We don't give that away.
Yeah. Yeah. Well, the people on this call or this meeting know the handshakes, which is great. So getting into the specifics a little bit, can we talk, and I guess we'll probably lean into Sarah and Marty on this, blue sky, valuation considerations, like what other things should in the weeds should we discuss here?
Do you want to start with that, Marty, or shall I?
Go for it.
Okay. All right. Well, I'll start with the blue sky issue because it's one of the sort of most intriguing and annoying things, and that is we get so many companies like, why do we have to be bothered with state securities on? We're talking here, and I think we should make it clear, we're talking here about tier 2 filings under Regulation A. Tier 1 filings has got this great red herring where people look at it and say, oh, look, if I filed under tier 1 and I'm not offering more than $20 million, I don't have to do an audit. That is a huge red herring because the feds don't require an audit, but pretty much every state does. And so once the company has sort of done that and failed and refiled with a tier 2, you're into the point where tier 2 filings, the federal law preempts states being able to review and regulate the offering or the content of the offering, but the states do have the ability to shake you down for some money for the privilege of offering in their state. And all of the states have completely different rules about what these are, but they're all notice filings, and you file either a flat fee or a percentage, which can range from something like $100, $1,200, or 1/40th of 1% of the amount that you're offering. And you have to calculate those and file those before you can actually make any sales in a specific state. And so we end up issuing a bill to our clients for between $8,000 and $13,000, even for the smallest filings, and they're like, "What? Why are we having to pay this?" But that's because the federal law preempts review of the offering circular, but it doesn't preempt being required to make a notice filing and pay a notice filing fee. So that's one thing. And then the states, bless them, keep changing the rules as well. So there's at least a couple of states now that say not only do you have to file going in, but you have to tell us when you've finished. Thanks, Mississippi and Maryland, because that's another filing that needs to get made. And of course, Regulation A offerings tend to be open for quite a number of months, if not 3 years, which is the maximum they can be open. So somebody somewhere has to make a note that in 3 years' time, they've got to tell Maryland and Mississippi that thanks, we're out of here. So those things are kind of important. The other thing I'd flag with respect to the states is, no, they're not allowed to review the offering circular, but they are allowed to keep an eye on fraud and anti-fraud things. So we will see some states, and looking at you, Arkansas, where they'll actually take a look at the filing, run the people's names through bad actor checks and the like, just to make sure. And sometimes we'll get questions about, well, so-and-so filed bankruptcy. Why haven't you declared that? So they can second guess on the basis of anti-fraud, as opposed to, we're not reviewing, we're just checking for fraud. So yeah, states can add a whole level of complexity to this, and you've got to deal with somebody who's got a big spreadsheet who keeps a track on all of these things.
Sarah, this is maybe a lawyer question that maybe I should ask offline. But one of the challenges with the blue sky filings is they'll ask you, it's the size of the offering or number of securities to be sold in this state, and a lot of that's really challenging because you don't have any idea. And so there's one of the challenges is how to address that. Do you guess? Do you just do the maximum amount? Do you say we're going to sell 75 million in the state, in which case the filing fee could be astronomical? Or do you, I've approached it kind of different ways and tried to basically say, well, let's guess, and let's, how many, how much do you think we'll sell in Tennessee? I don't know. Do you have any you have any thoughts on that?
Yeah, we sort of go on a state by state basis and pick out a couple of them that are a couple of the bigger states. Texas especially is one where we were, our approach should always be try and save the client money, file for the lowest number possible, true up later as necessary, make a note that it does have to be trued up and keep an eye on how much has been sold. With Texas, because we are seeing larger numbers of investors in Texas, we don't go for the minimum anymore. We go for somewhere, we assume that at least 500,000 is going to get sold in Texas and still true up later, still keep track. But Texans like Reggae. They're buying a lot of them.
Yeah.
Yeah. And again, just to reemphasize the previous points, choosing the right team to guide you through this process. Knowing that Mississippi and Maryland are going to require you to file future paperwork, and if you don't, there are repercussions. Understanding these nuances of where you can get caught off guard. You need proper counsel for that, and it's a big deal. And I'm curious how you keep track of all that with all these issuers you've done, Sarah, in particular.
Monstrous, spreadsheets, and sometimes things a little bit more sophisticated than that. But the real challenge is not keeping track. It's the information in, not what you do with it. It's getting the investor, the issuers, to tell you what has happened. Because sometimes we have to reach out to Eitan and his team and say, the company hasn't told us, please, can you help here? How much have you sold in Texas? Because we haven't heard from them.
Yeah. That is, I think that's a big problem is once they're sort of off to the races, a lot of times they're like, okay, we're good. We don't need you guys anymore until they do.
You annoying lawyers, go away.
Yeah. So we've had that problem as well.
Sounds like there's maybe a Reggae for a startup to build some software around tracking blue sky laws for attorneys. You guys want to participate? No, just
what somebody should do is build a SPAC to acquire all of the service providers in this area. But that's a time. There's a lot of functions that could be funded with a little bit more money.
Great.
There are some out there,
for sure. So as far as, and again, I want to focus on Eitan for a second, when should certain providers start entering the game here, right? We've got TAs, we've got obviously attorneys, broker dealers, marketing firms, maybe secondary trading after a raise. Like, can you share some thoughts around that process?
Yeah, once you have the team in place, you want everyone as quickly as possible. Right, because you want to benefit from their experience as quickly as possible. So, for example, on an investor acquisition marketing company that you might hire them now so that their vision could impact your website, your marketing materials, your investment minimum, your marketing plan, your budget, your expectations. Right, securities attorney from the beginning. Can I do what I'm looking to do, and am I working with someone who's done it many times before in this industry? Great, check. Broker dealer, have they worked with many cannabis companies before that have done high volume deals? Could they be a value add beyond just the administrative component? Do they have institutional relationships? Do they have distribution, syndication, marketing guidance, relationships with financial publications, newsletters, case studies, et cetera? Pick a team that's done it before and get them all geared up soon. You want to have that strong ship in place before you sail, and you're going to be stressed out enough, trust me, about how am I going to raise money and how am I going to get my investors to my website. That's where it should be. The technology, the legal component, the broker dealer, the trade review, the advertising review, all that stuff, really needs to be in place, because if one of those things are not in place, it's a massive distraction for the team and beyond. And so you really, there is a benefit, in my personal opinion, by looking kind of who's doing these deals and putting those parts in place sooner than later. Because while it might sound like a lot of moving parts in a process that could take 3 to 4 months, that goes by fast, right? Week after week, and all of a sudden you're going to be approaching the finish line or the starting line, sorry. And you're going to have to deploy a budget. You're going to have to launch a marketing and promotional campaign. You're going to have to become appealing to folks to cover you in their publications. And that takes time, and you want to have the benefit of everyone around you going through that process.
Yeah, and from my experience, it really helps if, all these teams are in sync, right? They're familiar with each other. They understand the process. They know, where they leave off and where you pick up. And, that seems to just really grease the skids here to move this as efficiently as possible. But if one hand doesn't know what the other's doing, you start running into lots of complications and people are pointing in different directions. And, it's, again, I know I'm emphasizing this team quite a bit, but we've all worked together quite a bit, and we know how this should work. Obviously there's hurdles from time to time, but you're assembling, and I'm going to pick on, the New England Patriots here, right? Of a team, just going to work like clockwork, even during rebuilding. Sorry, I'm in New England.
Yeah, no, I think you're absolutely right. And it's important to understand that this is still a very new industry, right? And the participants here and elsewhere are relatively new to these regulations, and to raising capital online at scale as a whole. You have technology meeting regulation, meeting innovation, and that's a fluid process, and it's always improving, right? And so there is some friction, and our job as the providers is to remove as much friction as possible from the process of launching a RegA to the flow of information, the access of information, to down to the user experience that the investor goes through when they click invest now, all the way until they can see their shares, right? So it's all about making the process easier and more fluid for the issuers and the investors ultimately. I think that we're doing a better job. We're all getting smarter. We're all learning, but things are changing. So you kind of have to be skating towards the puck while also incorporating best practices along the way. And so that's kind of how has been our approach.
Yep. Agreed. Thanks, Eitan. So, we have a few more minutes here. Can we talk a little bit about, all maybe issues that you've encountered, or, best practice ideas for issuers to think about? And, one area in particular I'm thinking about, if I'm an issuer, I'm the CEO of this company, or I'm part of the leadership team, how much time do I need to spend on this? I've, 8, 12, I don't know, whatever. Maybe I work 24 hours a day because I'm working at a smaller company. What's the time allocation for me to think about? What are things I can do to, again, mentally prepare myself and my team, for what to expect, and what should I not do and what should I do? And I know we've sprinkled some of that commentary in here, but maybe we could, regroup it into this question. And I'll start with Sarah.
Well, I mean, as far as the timing goes, the time constraints go, I would say allocate a whole person, and it's not going to be you, the CEO, whoever needs to be doing the CEO job. You need somebody who knows where all the bodies are buried, where all the bits of paper are, who to reach out to, because there's not only various people in the RegA team, but they're going to have to reach out to regulatory lawyer. I mean, this is a highly regulated area. The securities law team are going to need to talk to those regulators. So somebody's got to bring those folks together. And if there is one person who is at the center of the relationship, who can act as traffic cop, sending information and sending requests as necessary, you really don't want the auditors to be having to ask the brokers something. You want somebody in the middle there who is dedicated most of their time, if not full time, who can bring everybody together and take the burden off the CEO and the CFO, who have other things to do.
Mm-hmm.
One thing I'd add to that, I think Sarah's absolutely right. To the extent that somebody, you can spare a person or have a person, it makes the process a lot easier. Something Eitan said earlier that I can't, we can't emphasize enough is this is ultimately a marketing thing. I mean, you're talking here with a broker dealer and with lawyers and auditors and all of these things, but you have to have, the end of the day, you're going to have to sell these securities. And I think that's why that, and so there might be this person that's liaison with the attorneys and the different people, but you also have to have that mindset of we're going to have to go out and sell this. And, so always have, if you have a dedicated person that can prepare you to market these things. We just, had one group that they were qualified and they were like, man, this is the CEO now is like, I didn't realize how hard this would be to sell this. I'm spending all my time just trying to sell this thing. And so I think that's something to think about. I mean, if you have the ability to hire a marketing person or to help you, or a firm to help you with that, that's always going to be better.
Yeah, this is not a you build it and they come type of proposition. All potential issuers out there. This is not, one strategy might be list it on a marketplace and see what happens, and hope you get noticed amongst 100 or 200 people. Okay, good luck. If you have no marketing budget, that might be something to try. And hopefully it works out for you. In my opinion, the vast majority of the time it doesn't. It's look at RegA as an opportunity to take your share class structure, equity, yield, whatever your structure is, to the masses, to your own ecosystem, to the masses, to anyone over 18. And you have an opportunity to advertise that to them. But don't think for a second that you could just step back and be passive in the process. And you hire people like us and here on the team here, and you hire a marketing company, you just sit back and you run your business. You need to be actively involved here. There's constant decisions to make. There's constant reporting and analytics that you're going to see as far as return on advertising spend from your different marketing initiatives and decisions and allocations of additional budgets towards those things. The ones that win here are the active teams, right? It's the ones that are properly prepared. They know what they want to do. They've done their work. They have their budget in place. They have a general marketing team and a plan in place. And they just want to put together the right team in place to kind of launch their vision. Whereas if you're unprepared and you don't approach this with the right understanding of the need to have the right marketing budget and the right team in place, then you could scramble, and it could create a lot of pressure on the management and on investors and on the team. So we just try to be really transparent about what to expect and what we're seeing work for others right from the beginning. And like anything else, this is your company. You're raising money for this company, not some platform, not someone else. Ultimately, it comes down to the effectiveness of your own involvement in promotion and marketing that's really going to drive this.
Yeah, I couldn't agree more. I think just setting the expectations up front, assembling the correct team, doing your homework, as you say, Eitan. And the marketing is usually, at least from my experience too, is just it's a little bit underappreciated at times about what the level of effort is around that as well. So as far, what do you see as the number one area where issuers, what they fail to do, what they fail to recognize? Obviously, we talked about the time commitment and the effort in marketing and assembling the right team, but what else? What are things that folks, in your experience, tend to miss or just maybe put lower in the stack? And I don't know, maybe we'll start with you, Marty.
Yeah, so I think we've hit on the most important things, and that's putting together the right team, dedicating personnel towards it, and resources, and then marketing. The other thing, and I hit on it just at the very beginning, is just the structure, and we found this. Like I said, this is something it's not absolutely unique to cannabis, but it's definitely pertinent with how these entities are structured and how they work together, because there's just such an additional level of complication with the licenses, and depending on the service they're providing and what they're doing, different licenses are required, and there's background checks on the people there. So there's just this. That's one thing with cannabis that is unique, is this additional level of complexity with licensing and compliance, because you're talking with something that's illegal federally, legal in certain states. People have state specific licenses. So I think that getting those ducks in a row first is very important, in figuring out, how you're structuring this, what company or how you're going to go out and offer this, what are you going to offer, whether it's, equity or something else. So that's something that, when dealing with a couple of these, that they came to us and they hadn't gone through the thought process of really getting structured in the right way so that they were prepared to do this. And I suppose that's applicable to other industries as well, but particularly here.
Sure. Any thoughts on that, Sarah?
And I'm going to focus on the, sometimes people don't focus on the end game. The exit strategy. They just sort of magically think, well, now I am I'm not actually a public company. I'm doing a public offering, but I'm not a public company. And what about listing? And so thinking about what the exit strategy is going to be for investors is very important. And one thing I wanted to flag is, now you think about what are your typical exit strategies for earlier stage companies. It's you eventually do an IPO or you get acquired, right? So not all of the companies in this market are going to do IPOs. They might get acquired by SPACs, but many of them are too small for the SPACs. And so trading is going to be the ultimate exit strategy. Because one of the things that I did want to flag on the acquisition is it's very hard to acquire a company that has 50,000 investors. There's this thing called Rule 145, which says if shareholders are holding a vote, that is an investment decision. And in most cases, unless you have structured your offering so that there is not even a statutory vote, no right to vote on anything, mostly you have to vote on acquisitions. And that being the case, that's a securities offering, and that offering itself has to fit within an exemption, which could be a registered transaction such as a SPAC, or it could be a Reg A. It certainly can't be a Reg CF because that's too small. So acquisition becomes much more difficult for a company unless it is able to do to appeal to a registered company. So the exit strategy is an eventual quotation on an ATS. And so think about the fact that you might want to be offering that, because a lot of people go into this thinking, well, this is great, but where does this end up? What's the end game? So think about the end game at the beginning.
Yep. Thank you. Yeah, the great words of wisdom here. So we're about towards the end here. Any concluding thoughts? And I guess I'll preempt it by suggesting, where do you see regulations going? Specifically potentially with cannabis companies, or just regulations in general. This is the free for all. Any other business we want to talk about? Yeah. So I guess maybe start with you.
Yeah, I would say prepare for the grind, and don't rely on one thing. Meaning you want to be able to take advantage of marketing and investor acquisition, financial publications and newsletters, effective PR, syndication and distribution opportunities, to the extent investment banking and introductions to venture and private equity and family offices are relevant to your offering, and to factor that structure in right from the beginning. So you're not reliant on one thing. As far as where the industry is going, at least from our perspective and visibility, close to 200 million raised for cannabis issuers in the last 2 years, 500 million about to hit the market. It's there. It's happening right now. I think it's reflective of the retail investor appetite for having an opportunity to participate in cannabis. I think we're seeing it extend to other things like psychedelics. One of our clients, EI Ventures, is raising a $50 million Reg A. They've already raised 20 million of that. Right, so that's impactful. These companies are putting away 50, 40 $1 million, and that's to be noted. And then they're going public, or they're listing on an exchange in the US or in Canada. This is a path that can work, but you have to prepare for the grind, and you have to align yourself with every possible avenue of success, because you can't rely on one component. And that's the advice I would give to new issuers who are considering.
Great. Very good. Marty?
Yeah, I don't have any, pearls of wisdom to add to above what Sarah and Etana said. I think that this is a changing area of regulation, and that's something that obviously needs to be addressed, and there are risks. One of the things that one of the concerns that, and I don't know, I guess with the amount of money that's flowing into this, it hasn't been a huge problem, but we have had, people say, well, can we even invest in this because it's, it's cannabis, and so there's some additional obstacles there. But I think that, not only is cannabis a evolving area, but this area of securities law continues to evolve, and I think there's additional hurdles that have to be overcome, but you also have to, there's also doors and that continue to be open. So it's exciting to see what will happen.
Great. Thank you, Marty. And Sarah?
Yeah, I think this industry is going to grow. I mean, both cannabis especially and reggae. I think we've seen all of the changes that we're going to see from a regulatory point of view for at least the next 3 years. I wouldn't anticipate any easing up. All of the questions that the SEC had raised in various concept release and proposals is, how about we do this? How about we do that? Like easing up on some of the communications rules, where a lot of us said, yes, please do that. And they're like, yeah, maybe later. That's not going to happen in the next few years. So the rules are probably set. We're probably going to see more enforcement in this area, which I personally think is a good thing. And I think that some of the problematic offerings in both RegA and RegCF might be publicized, which is good for everybody. But the industry is going to grow, and SEC enforcement will help that grow. So growth industry.
Well, thank you all so much. It was a great panel. Again, apologies, you got the B team here with me from Rialto, but thanks for the opportunity. So Etan, Marty, and Sarah, thank you very much.
Right. Thanks.
Thank you.
Thanks, Oscar.
Take care.
Oh, you're very welcome. Well, that was great. Wow. I know when Jordan was talking about the pain, it's a lot for everyone to grasp, but the important thing is here, what you heard are people that are actually doing it day in and day out. I think I heard Etan indicate that he just recently noticed that he's done 10% of his offerings in cannabis. I think that's fantastic. It just goes to show you how attractive this sector is. We need to remove the stigma out of it. And it's interesting. I was just looking back at some of the emails when we were posting out there. Somebody actually sent me an email saying, Oscar, what are you, a weed pusher? I found it very interesting because it is, if anybody knows anything about us, all we're trying to do is provide education to the market, to bring the market the much needed information they need for companies to succeed. And I tried to explain to this individual is that that's not what this is. This is promoting companies that are doing offerings fully compliantly to raise capital. And all we are doing is facilitating an education channel for them to be able to do this. And that's what this is. Jordan started the day off for us, providing that kind of overview that we all needed, which is, what does the cannabis sector look like? It's exciting. It's hot. Yes, it's got lots of different intricacies that you need to be careful with, from banking to, where you get associated with property and, all these other parts. But that's the exciting part. You're paving a new way. Nothing was going to be simple. And the important thing is, the foremost, we need to remove the stigma from it. I live in a country where it took a while, but investors understand that this is a legitimate business. Nobody's doing anything, and there are those who put it in approach the sector very differently. That's not what this is. This is very professional. More importantly, giving you the necessary tools and education to do it properly, compliantly, and to make sure that investors see the true merits of your business, not the other elements of it. This next panel, I'm really excited about because we've been putting this new kind of twist inside our KoreSummit. And I told you there's a bit of a surprise, right? So, with Jordan leading us off and having the broker dealers, the lawyers talking about the sector, it was important to have these kind of sideline items that people are now thinking about. Okay, wait a minute, I really want to invest in cannabis, but I have an IRA account. And so for that reason, we're really excited to have Bill Humphrey back here again. And as well, we have the CEO of a company called Triangle 9, who is, really, I'm so excited about this because I started having a conversation with her and I go, I didn't even, it feels like, what I always tell people, I love opening new doors because it's how we all learn. And by learning is the key. And this is where Jennifer is going to kind of give you an interesting element to cannabis, which is real estate. That's right. And people never think of the real estate element of cannabis, but you have to imagine all the real estate is needed. And here's a new kind of frontier that we hadn't looked at before. So this next panel, that's what we're going to be talking about with Bill on the IRA and of course, real estate and then real estate and cannabis. So welcome. But first, Jennifer, please lead us off. Introduce yourself.
Sure. Hi. Thank you for that warm introduction. And like you said, I'm the CEO of Triangle 9, and we are a company that is focused at the moment on this really interesting nexus and point of connection between a highly regulated industry and a very solid and established industry. And that highly regulated industry is the industry of cannabis. It has a lot of nuances. We all know about the federal restrictions and the state legality and how those things play in and create an environment where it's really difficult to navigate. And in those environments, how do people find safe spaces and more stable spaces to carve out a niche for themselves when it comes to investment opportunities or when it comes to opportunities just for business in general? And we think that we found this interesting space, and the reason that we initially even started exploring this was, one, because of the stability of this collateral and layered on opportunity, which is real estate. People often, just like Oscar said, don't think about that there are some places where you do not have to be plant touching. You do not actually have to go in and touch the plant. You don't have to focus on cultivation and sales and things like that. But there's still some very stable industries that are necessary in order to bolster our new and burgeoning cannabis industry, and real estate is one of them. And right now, real estate merged with cannabis provides a really amazing opportunity for investors to have stability, non-plant touching opportunities for investment, and something that's a little bit more palatable. It's easier to bite off and chew. A lot of times when you talk to people about, Delta 9, the difference between ethanol extraction and all the different ways that you can extract cannabis, you can see their eyes glaze over because there's so much new in the cannabis industry that sometimes it can be overwhelming to people. But that place where real estate, it doesn't have that same sense of overwhelm or that same sense of kind of disconnect, right? There's a familiarity there when it comes to real estate investment. And we really think that there's something special in the way that these two industries connect and the nexus that creates. And honestly, the really strong investment opportunity it creates. I heard someone say recently, instead of being in the industry, and it's a joke, but instead of being in the industry of selling cannabis or selling drugs, why not be a landlord to everyone who is selling drugs? And I thought it was just an interesting joke because it's kind of, instead of being a drug dealer, if you're the drug dealer's landlord. And there's some stability there because everyone needs property. And it also gives operators, people who were actually operating in the industry, an opportunity to take back that liquidity that they might have had trying to spend a lot of money to purchase properties and to purchase their building. Now they can lease them back to companies like ours and retain that liquidity. So.
Perfect. Well, thank you for that great introduction. But it needed to be said, and I think it fits in nicely actually with you, Bill, because you talked regarding IRA and real estate, but now we've added another little kinky thing that, you hear that word and people go, whoa, bankers and so on. But please take a moment to introduce yourself, and let's dive into the discussion.
Great. Well, thanks, Oscar. And nice to meet you, Jennifer. Unexpected and welcome addition to this panel, I'm sure. So I'm Bill Humphrey, CEO and co-founder of New Direction Trust Company. We are a provider of self-directed IRAs. And we are based in Colorado, but regulated from Kansas. Now, if I'm going to have two opposite perspectives on marijuana, you've got those two states as a good example. So question we get all the time is, can my IRA invest in cannabis? Because a lot of our folks here in Colorado look across the street and they've got a neighbor that is making money from cannabis. And they say, well, I don't have any money other than my IRA. How can I play? And unfortunately, what we have to tell them is, well, the IRA is a federally regulated and controlled entity, and you have to follow what the federal rules say, so you cannot be in the cannabis business. But like Jennifer was saying, all these subsidiary or ancillary entities, like we had somebody who had a warehouse. They couldn't rent the warehouse. Lo and behold, their warehouse was in a perfect location for growing stuff. What the stuff is, it doesn't matter, because as long as your rent comes in, you're a landlord, you're getting the rent payments. But sometimes those folks that are looking to grow cannabis don't have the ability to go to a lot of different places, because some states and cities regulate what can be done in those buildings. So if you do have a building that's in an area that's outside of one of those no cannabis rules, then certainly if someone comes and wants to rent it, you don't care what they're growing. They may be growing cannabis. They may install all sorts of sprinkler systems and water systems and hydronics and all that stuff, but that's usually on their own dollar. Although conceivably an IRA could fund that equipment as well. But the answer is, you can't be in the cannabis business, but you can certainly own assets that are leased or rented to people that are in the cannabis business.
It's rather interesting. I mean, until I met Jennifer, you're right. I never put that perspective into play about, I never thought of the property. So in the scenario that she spoke of, in that narrative where her company has found a very interesting, I'm not going to call it a niche because it's not a niche. It's cannabis, right? We're not thinking of the real estate, right? I mean, so in that scenario, I just want to kind of get an answer from you, Bill. So in that scenario, that would qualify for an IRA, because she's actually not handling the cannabis. She's just providing the shell where people are going to do business. Did I get that correctly?
You got that correct. That's perfect. And like you were saying before, there are some banking issues that might come up. So you don't want to have your renter paying in cash that might smell a little funny or have a taint of cannabis related to it. So, but that's on the cannabis company side to figure out how they're going to work through the banking system to send the IRA the rent check. And that's, as long as it comes, then you don't care who that renter is. And probably, or potentially, that renter would be willing to pay a little more, because the facilities to grow cannabis and manufacture the cookies and all that stuff are more regulated, and they're less available properties than the general property. So you could take something that you couldn't rent as easily and rent it to a cannabis manufacturer or grower or whatever. Just don't be in the business yourself of creating and selling
the product itself. And obviously for you, Jennifer, I mean, hearing this, obviously, maybe you did know already, but let me ask you this. I mean, since all of us are not even thinking of the separation, is this a new frontier pointing the view of, the real estate, separating it from the operational side, which could then open up to this new, what is it, $9 trillion of capital that's sitting there that people couldn't participate under? Is this the navigation we're moving into?
I won't say that it's new, but it's definitely a frontier that has not been as heavily explored. So for clients, like we were just talking about, they're looking for opportunities to be in the cannabis industry and close to it, but want to really toe the line of legality for federal reasons and things like that. It creates a really interesting opportunity. And for others, in a much broader way, that are looking for the stability of of established industries, opportunities like this really do present themselves as an interesting, ancillary business. And that scarcity is important. There aren't a lot of people that are actually welcoming to the industry. So even if the properties are available and present, and they meet all the regulations, you still have to find landlords and property owners that are welcoming to the industry. So when you're asking, is there a newness there? There is a newness, and there's an unfamiliarity that a lot of property owners have, for the needs of clients in this space and the needs of operators. And, that, again, it creates a very interesting, point of opportunity for investors and for, people that are trying to find, an interesting place of stability. So the answer is yes and no. Yes, there is a bit of a new frontier. It hasn't been as often explored. And the people that are pioneering in this space are doing really well. And investors that are looking for opportunities in this space also have some restrictions, right? So for us as an entity, we are using the RegA platform because it also lowers some of the barriers to entry. Generally, if you are trying to find a more stable opportunity, like the nexus between a highly regulated industry like cannabis and the opportunity that's a little bit more stable. And again, this isn't always real estate. This could be, all the people that provide the organic fertilizers or the lights, the grow lights, all that kind of thing. But in this instance, the barriers to entry for most investors in the space usually is fairly high. It may take $10,000 to $20,000 as your minimum investment to be able to have a piece of something interesting, like a company that's investing and heavily vested in cannabis and real estate. And one of the things that we find that's really interesting about the RegA platform is it allows, the investors that we're looking out to reach out to an opportunity to get access to these very interesting deals with a lower threshold of monetary levels in order to get into the deal. So, for example, we like the RegA space because we can tell investors, hey, you don't have to have $20,000, $50,000 to get in on this deal, which is the way that most cannabis deals are structured right now, especially in the space that we're talking about, in the cannabis and real estate space. So I think that's one of the new elements.
It is positive. So, I got an interesting question for the both of you, because, when I met you, Jennifer, it was new to me. And you're right. Other people may know, but you're right. I was, every client that I have in cannabis is always, front lines kind of thing. I don't even think about the warehouse. It wasn't until Jordan showed me a picture one day, how big it was. And I'm going, holy Jesus, these operations are not, they're not just a corner. There's 120,000 square feet facilities. So on that note, Bill, I mean, how does New Direction or any IRA custodian proceed with the fact that, okay, just like Jennifer's company, she's going to be doing a RegA Plus offering. It's going to be real estate as cannabis. You get this. Are you dissecting it, or you're just saying, okay, since it's real estate, it's okay? Or are you asking additional questions that need to be adhered to from an IRA custodian point of view to make sure that investors can qualify to it? What would be the process in a scenario like that?
So we are not aggressive in asking about who you're going to rent to. So typically, if someone comes with a package that they've already worked out and they have cannabis floating around all over the place, that's going to raise a flag to a regulator that's looking at it. So we encourage people to just look at the property, keep the renter separate, and you're good to go. So there's nothing different other than renting to to the cleavers across the street to the pot growing house across the other street. So it's you vote, your asset that the IRA owns is real estate. So you're going to rent it to the individual or entity that's going to pay the best return. And oftentimes, since the rarity of facilities that can be allowed to grow cannabis certainly drives up that price. And also there are outlying areas that aren't as closely monitored by the neighbors and the county or the city authorities. Probably better to bring in somebody who can't go into the city to rent. And that's often a cannabis grower or a cannabis company.
So, okay. So in other words, what I'm hearing, at least Jennifer, I heard you heard the same thing. So it's quite simple. There's not and the only reason I'm asking, obviously for selfish reasons, right? Because as you know, for cannabis companies, every once in a while they go, Oscar, do you think cannabis can do IRAs? Because that's the next appeal. But in this case, because it is real estate, this would be it would appeal to an IRA custodian to view it. And as you're saying, your firm in particular, you're not digging deep into how Jennifer or companies like Jennifer are conducting their business. To you, it's a real estate property. They've been qualified by the SEC. Therefore, the investor qualifies because that's the underlying asset that they're investing in. They're not investing in the company that Jennifer may be renting to or leasing to. I got that correctly?
Correct.
Look at that. It just, I said, I know you're smiling. This is, I know for everybody, you probably wonder why is Oscar so happy? Because you got to understand for cannabis, and Jennifer probably knows this as well, your payment rails are so limited. And anytime you get a payment rail that expands it, it changes the way you can approach the market. What Bill is outlining here for us is that IRA is close to certain parts of the cannabis, but here's a component of it, real estate, that we never even noticed it, and here it is, and it does qualify. It meets and you can open it up. So now you don't just have, ACH, or maybe if you're lucky, you can find credit card or crypto. Now you got IRA. That's another payment rail that you can offer your investors to participate in the round. So that's democratization. Opening it up and removing the barriers. So, sorry, Bill, you were going to say?
I was just going to say, if you're forming an entity to buy this real estate, try not to name it Three Puffs or
thank you,
any of those names that relate to cannabis, because that might lead people to ask more questions than they would ordinarily. So we've seen people who come up with names that certainly raise a flag, but
that's a great point. A while back, somebody sent me something. Oscar, I got a great cannabis company, and the picture was with a gentleman in the front with something in his hand, and then some ladies in the back dancing, and all it was just this fog. And I said, I can't help you. I don't know where I could take you that is going to be able to help you with this, but at the end of the day, we're all doing legitimate. I really like this new element that Jennifer and her team are bringing together. I'm excited about it because I've been saying cannabis has been quiet for the last few months, almost 6 months to a year. And I see a different type of cannabis coming now. I call it the professionalism of cannabis. I don't know if you noticed that, Jennifer. I'm certainly noticing that, right? We're talking real estate cannabis. This is real estate. We're talking companies like Jordan, who are operational businesses. They professionalize the business. They respect the ground roots of where it began. I know some of the purists would say, you caved in. No, you're not caved in. It's just there are certain procedures and policies all of us need to follow. And I'm really excited about this. This is a topic we're going to be discussing more and more as time goes by. And today I wanted to kind of put it in here for the few minutes, because I wanted people to, because the whole discussion they heard this morning was how difficult cannabis is. But what Jennifer's doing is the twist. It's the twist that, wait, this is easy. It's real estate. Boom. This is it's not as complicated as it seems. And Bill, you've opened up a new door, and thank you for that. Great. As always. It's great. Thank you to both of you for this afternoon. I'm looking forward to seeing you both again very soon. Today, with all of that, like every opportunity, where does it go next? Right from the lawyers to the opportunity you have, but somebody has to tell your story. And this is the part that I really enjoy. Somebody needs to tell your story. Someone needs to be able to put that narrative, just what you heard earlier. I mean, imagine for a moment, you just found out that you can expand your frontier of client base. Well, these are three gentlemen that are really gonna love that. Whoever ends up working with Jennifer, this lady just opened up a new channel, because in cannabis, you never saw, anything with the word IRA next to it. It was sort of like, IRA who? Boom, out the door. So I'm really excited about the next panel, because these are individuals that have been there doing regulated offerings for Regulation A, and in particular experience what it means to do a qualified, fully compliant offering when you're dealing with this kind of hot topic in general. And we're going to be led off by Jason Fishman. And please, Jason, lead off and introduce your colleagues. Thank you, gentlemen.
Thanks, Oscar. Appreciate that warm introduction. Love that last panel. Great to be logged in early and check all of that out. I'm sure the audience is picking it all up. I'll do a brief intro on me, but want to point towards Richard and Dawson here. But just so you know who I am, I run an agency called DNA. We do investor acquisition, over 200 campaigns to date, 9 figures of capital raised. Excited to talk marketing here today, but impressed by everything that Richard and Dawson are doing. Richard, you want to kick things off and give an introduction on yourself and your company?
Happy to. Thanks, Jason. I'm worried that the lighting is making my hair look like it's thinning a little bit. I don't want any comments from the panel over here, okay?
You look very good.
No, you look solid.
Thank you. I appreciate that. So first, I'd like to thank Oscar and the great team at KoreConnect for setting up this very informative event on cannabis and reggae, and for inviting me and the rest of the panel to speak on investor outreach. Just realized why I like Oscar so much, because he's a Canadian like me. And being Canadian, I've had a bird's eye view of the federal legalization of the cannabis space, although my focus has been almost exclusively on the investor outreach space. I'm happy, obviously, to speak with the rest of these esteemed gentlemen. That said, I don't know the industry as much as folks like Sarah and Etan, and Lee and I definitely look like we coordinated our business attire today. But I loved hearing from the panel earlier, especially Marty's comments about the importance of marketing and starting early. So I'm Richard Heft, and I co-founded Extension Marketing about 13 years ago. EXT is a full-service marketing firm that helps financial services firms achieve their marketing strategy, communications, and regulatory objectives, and serves many of the world's largest tier 1 banks and insurers, mutual fund companies, private equity firms, hedge funds, and credit unions. EXT Digital, EXT Marketing's digital arm, has been at the forefront of the investor marketing industry since 2016. Our company enables new digital ways for Reg A, Reg CF, Reg D, pre-IPO, and publicly listed companies to syndicate their investment story across multiple channels, generate corporate awareness, and attract retail investors. And since our founding, EXT Digital has helped a number of cannabis companies with their Reg A and Reg CF pre-IPO offerings, including the pay-per-click. We did the pay-per-click campaign for Gauge Cannabis, which was mentioned earlier by, I think, Etan, and that was a successful Reg A capital raise and helped attract some larger institutional fund managers after our mostly retail-focused campaign. That's it. That's all I got.
Love it. Love it.
Awesome. I am Dawson Russell with Capital Raise Agency. Wanted to thank Oscar also. It's an honor to be on this panel. I think we're going to have a lot of fun. Been doing this for about 15 years. Got started in the kind of financial advisor, wealth advisor world. My father was a financial advisor for 25 years. Started doing work for him, and that really just snowballed into colleagues asking where he was getting his stuff. Word of mouth to sponsors and asset managers where the advisors were getting their marketing materials. So just really blessed that it's kind of gotten to the point now to where I am able to focus primarily on Reg D, Reg CF, Reg A raises. Love the space, love the industry. even just the small little family we have here. We had a fun time catching up on Friday, just getting ready for this. And you can just tell everyone's here to help each other out, which is a really cool environment to be a part of. So, but yeah, I've been doing this for about 15 years. We primarily focus on the storytelling aspect. So really trying to pull out the story from the investment and tell not just your story, but your unique story to the investor base, so that they can really relate to it. They can see the credibility, but they can also emotionally be drawn in. And so that's really where we focus, from everything from video, media, web, and pretty much we're a full service agency as well. So yeah, looking forward to the discussion. Thanks, guys.
Excellent. Excellent. Excited to be here as well. One of the things I love about KoreConnects is how they bring this community together. And as Dawson was saying there, it was brought up to me by Oscar in one of our first conversations of, we picture multiple agencies working with the RegA Plus to hit new milestones. And regardless of the vertical, and I'm glad we're focused here on cannabis today, there's, similar models. We're changing up audience, changing up messaging, changing up some of the funnels at that. But we've been able to see strong success on RegA Plus campaigns, also some Reg CF for cannabis and Reg D on top of that. And I want to take the conversation to where it all begins. We get in touch with an issuer, and they're maybe working with legal, getting their audit done. They're preparing to launch on a platform, maybe using KoreConnects or a platform similar to launch on their own site and get everything set up. Where do you begin the conversation? How do you put together their strategy and manage the pre-launch of the campaign?
From our standpoint, it always starts with that strategy. So you would learn a little more about the brand, do some goal setting, audience identification. Then you start to maybe based on that information. And I love what Dawson said about creating content that connects, because I definitely want to get to that. In terms of creating messaging, creative concepts, and deciding what type of media you're going to sort of get across. That would be building out that strategy is the start of any great campaign. And by doing so, you set the pieces in place. We always talk about sort of the assets, the ClickFunnels, landing pages, white papers, newsletters, some of the other sort of deliverables that Dawson sort of mentioned earlier. But the core is, what are you going to say? How are you going to say it? Who are you saying it to? You start to do a little bit of digging on the timing and that type of thing, especially with RegA. You have limitations as to the types of pre-marketing you could do. So you want to sort of look at that and build a real plan around that and a real firm strategy. Again, I know we'll talk about this later, but obviously the good thing about these types of digital marketing strategies is you do some A/B testing later on, and you definitely learn from what is working, what isn't. And that is a learning for a lot of issuers and clients, where you do, not every ad, every white paper, every video, every infographic hits the mark. Sometimes you do have to test where it's going, who it's going to, and what it is, what the messages are, and then adjust accordingly.
Absolutely. You have assumptions going in, and that all gets confirmed with the analytics, as you mentioned, can optimize. Dawson, what about yourself? How do you guys put together strategy?
Yeah, no, I think you kind of hit it. It's so fluid and flexible. And so we obviously come in with kind of our, like you said, kind of preconceived ideas and strategy and plans. But just as an example, one of our cannabis RegAs that we're currently working on, as we started having those discovery calls and kind of those strategy calls at the beginning, we learned some things we didn't know going into it, that they had, a legal email list that we could tap into, that we could create lookalike audiences with. We started hearing them say things over and over again. And a lot of it's just conversation when it comes down to it with your client and with the issuer, is knowing, okay, that they keep saying this phrase of, the industry is going towards celebrities backing these cannabis brands. We're just farmers. And so we kind of took away from that and we said, okay, invest in farmers, not celebrities. And that's kind of our campaign slogan that we're going to run with. And like you said, we'll A/B test it. It might flop, it might do great, but we were able to really pull that out of those initial conversations where we could have gone into that thinking we had one strategy in mind, and they were able to just have this conversation with us to really take us a new direction. So I think a lot of it's just listening and then going from there.
Yes. That's at the forefront of our strategy process is the industry overview and competitor marketing audit for listening. The competitor marketing audit is where we take the most findings, and exactly like your story right there, where we'll put together a SWOT analysis and take from the cannabis issuers out there that are performing to the best degree. Also, some of the cannabis marketing outside of investment acquisition, just so we have inspiration. And success leaves clues. Looks like my camera's going off here. Success leaves clues, but that all comes to life in the content creation. Richard, once you guys have the strategy completed, how do you go about content creation?
Yeah, we look at the brand. We obviously, we do have a PPC manager who will set up the personas. A lot of the stuff you and Dawson have been talking about. Create avatars, and then we will start to drill down on some of the brand educational content, like the brand story, the ethos for what we think will be a successful campaign raise, along with compelling content. And it'll build off what the client has told us or what the issuer has told us is what they're trying to convey. Again, in terms of content, there's always the fallback position to talk about product, or in some cases services, in the case of maybe, the real estate space of this industry. But I always talk about, and Dawson sort of alluded it too, talking about the more emotive area where, if you can educate, it builds a better engagement to me. That's where it all has to start. So we'll take the brand, but we'll talk about more how it's enhancing people's lives, what people's needs might be at that time. Really start from the core and build out from there. And then, obviously we have to look at what is, how we incorporating that overall messaging into the landing page versus the ads. Versus whatever it is, a white paper or the other, if it's going to be a video versus a white paper, the content may have to be adjusted accordingly. So it's also the platform. I mean, we are firing this, these campaigns, these ads onto maybe 200 different, not 200, but a number of different sort of platforms. Websites that the avatar or the persona work we've done has told us our intended audience will be on. So, it may have to be relevant to the site. It may have to be relevant to, a whole host of things. And again, we do the testing and we see what is working, what isn't. If it isn't working, the good thing about these types of campaigns is they can be adjusted pretty quickly. We usually have some additional content pieces and types and approaches in the can, in the background sort of being worked on so that, if we do have to adjust, we can do so tactically and quickly.
Is that similar to your storytelling process and the ideation that goes along with it, Dawson?
Yeah, absolutely. And in particular with cannabis, one of the things that we have had to shift a little bit in our thinking when we're going through that, because for example, if it's a real estate deal, 9 out of 10 people have either invested in real estate, know someone that invests in real estate. So there's kind of that standard that you don't really have to educate much on some of that. Whereas with cannabis, we've really broken it down almost into 2 separate audiences where we've got, the people that are very familiar with cannabis investing, and then the ones that have maybe never even thought about investing in cannabis. So how do we create content that really helps nurture the people that have invested before and push them into obviously learning a little bit more about this particular product? Or with the ones that haven't invested in cannabis before, maybe they're, kind of a little scared of it. Maybe they just don't know anything about it as far as an industry. How do we educate them to push them over the edge to see this is actually a great investment for your portfolio and a great way to diversify a little bit?
And when you say them, I want to take a step back and go into audiences. And we talked about this Friday a little bit of some different tiers of cannabis investors, their knowledge base, and getting to the education point of it. Could you elaborate on that and how you guys map out audience and even messaging for those A/B tests for those given audiences that you're measuring comparatively?
Absolutely. Richard, do you want to take it first?
Yeah, I mean, we're looking at a sales funnel, and we always look at sort of the 4 building blocks of that sales funnel. Like, we start with sort of analyzing the audience's, overall behavior, where they're going to, what they're reading, what they're spending a lot of time on, and then we'll sort of create content that will capture their attention. Usually, and we, obviously it's a funnel. We're looking at it as, okay, so we're going to build a landing page that continues to build out. It's going from maybe micro content to sort of larger content forms or longer content forms. And then we're looking at, a continuous engagement of that, like a drip campaign, where it will be either a newsletter, an e-blast, once they've signed up for the additional content on the landing page, or if there's content that you want to drive them to on the website. So it's all building from the same story and the same sort of content type, but it has to be, in my mind, something where you keep them coming back. It has to be an ongoing engagement. Did that answer your question, Jason?
Yeah, absolutely. And when we see cannabis campaigns, and as Dawson was mentioning, there's cannabis investors that participate in these deals regularly. There's other audiences that have heard this is a good place to position their portfolio, whether it's a high risk section of that or something more long term. Maybe they're working with the wealth manager. Reggae Plus, maybe they're just a retail investor, and this is matching headlines from what they're reading on Business Insider or Forbes or the Wall Street Journal that day. So just trying to get a better sense of how founders can map out the audiences that they want to target, how to align messaging accordingly. So that definitely elaborates on it, Richard. Dawson, anything to add to that? Any other notes on how you bucket audiences and create content accordingly?
Yeah, I mean, I think we'll probably say this phrase about 1,000 times on this call between us, but I mean, A/B testing, looking at what's converting. I mean, that really starts to tell us who the right audience is. So I think there's one section where you're like basically saying, okay, I think my audience is this. And then as you start to run those ads, and you start to do those promotions and just get the word out there, you really have to let the audience kind of tell you who that's going to be, and then let the algorithms go after that person. So, that's, and as we look at that, we're always looking at a couple things, and this is not my own, I took it from a marketer that I follow. So, but hook, story, offer. So it all comes down to, hook, story, offer. What's your hook that's going to grab their attention? And then once you have their attention, how are you going to tell them a story that gets them interested enough to take a look at your offer? So usually if a funnel's not working, it's one of those 3 pieces. Either the hook's not good, the story's not good, or the offer's not good. And typically, if they've gone through the RegA process, they've passed the test on it's got to be a decent offer for it to get past everything. So that's really what we look at too.
I also, sorry, Jason, just to add to that, I also think, it's super important to look at the type of action you want these individuals to take, where, it's not just you leading them, it's also at some point during that funnel, you do want them to take action. So, you have to think about how you're positioning your calls to action, what you want that next step to be. Is it driving them to a website, to a piece of content, to call someone, or to have someone call them, or just for ongoing, information, which, puts, that much more importance on the information you're providing.
Sure. Tap into their mindset, whether they're a historical cannabis investor, cannabis equity crowdfunding investor. We'll generally start with 4 to 10 audiences, historical, equity crowdfunding investor, industry specific and non-industry specific. And, I think exactly as you're saying there, Dawson, to echo, let the data tell you what's working. That's what we're all playing for, is let those numbers show us where to optimize additional resources, time, spends, so on and so forth. We have an optimization process that we use. So whether we're talking about audience, whether we're talking about messaging or the funnel, we want to be able to continually improve. We want to be able to focus towards what's working best. I think you brought up, Dawson, in our earlier conversations about headline tweaking. And that really stood out to me. being able to really capture, and Richard, as you were saying, the mindset of the investor to really capture their attention. Do you have any tactics towards that you could share with the audience? Any processes that we could both build off here?
Sorry, was the question for me?
For anyone, but more to start with Dawson, just as it was one of the takeaways I took from your strategy.
Yeah, absolutely. So, one of the things that we do look at when we're going back to that whole hook story offer piece is, headlines. I think headlines, it's easy to just put something in there because you need a headline. So if that's in a Facebook ad, if that's in a blog post, if that's, just a piece of content on the website, so often I think we throw out content because we need to fill space, when in reality that one little headline can make the difference in someone taking action or taking the next step to read a little bit more content. And there's a great story of a marketer that was speaking to a bunch of salespeople, and he got up on stage and put duct tape on all the headlines of a newspaper. And he started asking them what each story was about. And obviously they couldn't tell him. And so he asked, why is that important? Well, we have to know the headline so we know what it's about. And that's the same thing for anything that we're doing. You have to use the headline to tell them what you want them to learn or what you want them to be educated on, or else they're going to be confused. And we all know confusion as marketers is never a good thing. So bounce rates are going to soar. And so I think just that copywriting process, it's, in such a digital world, we tend to focus a lot on visuals and video, and trust me, I'm guilty of it. But really fine tuning your copy is so important. And so just making sure that it's something that is going to stand out and grab their attention versus just invest in XYZ cannabis, and try to tell your story through that headline. So Richard, what would you add to that?
Yeah, I would just say, I completely agree with everything you said, Dawson. I would also say that you can't assume that anybody's going to read anything but the headline. So it does have to be very tight, very catchy, and tell them what they need to know in 5 words or less. So yeah, 100%, and tweak accordingly, because if people are not doing the action or that you want them to upon seeing that headline, it is often the case that you need to update accordingly. And I keep going back to the cannabis space, and there is so much uncertainty. There is so much that could be leveraged for educational purposes in this space. There's and we've had similar experiences as Dawson, where we could really have maximum impact with just a headline. I started my career as a copywriter. And every word means so much, and it does, but that's on the assumption that somebody's going to bother downloading or send, give you their email address so that they can be sent a white paper or a deck or whatever it is. So to me, it's getting that message across strongly, adjusting accordingly, and using content that will create that engagement, will create that action that you're hoping to accomplish, and by doing so, and again, in the cannabis space, there's so many opportunities for good, strong content. I can't, it's a fairly new industry. It's in the U.S. it's not legal federally, so there's still states where it's still sort of going through the process. It creates such a great opportunity for engagement, to educate, to inform, and by doing so, you will be the name brand to these individuals.
Absolutely. As you're saying, and I echo all of that, by the way, so much opportunity for thought leadership to be at the forefront, to be a name brand, all the different complexities of where the content can be distributed to do so. When I think thought leadership, social proof comes to mind, third-party validation. And Richard, I know you pointed out your use of influencers and overall third parties to validate the product, the opportunity. How can issuers use influencers in their campaigns, whether it's in the ads, the content, maybe the offering page itself? How do those type of relationships come to fruition, and what does that do to performance?
Well, it does a tremendous amount. Yeah, we work with a lot of social influencers or finfluencers. There's a bunch of nicknames and words we're throwing around now. But, we know that 88% or 98% of investors use digital sources to conduct their research. So people are looking for information, and 88% are making investment decisions based on that, on the information they've learned online. We know that they listen to influencers. They follow them closely. They're encouraged by them. You want to be very careful, just because there are, when it comes to RegA and all the regulations, you do want to be careful with the type of things you can say, what you can say. When we're dealing with influencers, we do have to, they have to post the right disclaimers. But they're also not pushing product. They're not guaranteeing a stock price is going to go up. They're not guaranteeing something's going to perform in a certain way. Really what they're doing is, they may be saying, look, there's a tremendous amount of interesting research being done in the Canadian space, learn more, and post a link to sort of white paper, these types of things. So people, they can help get people to take actions. It's not, we're never going to say it's going to drive up a stock price or it's going to cause this, amount of trading in a day. None of that. But people will, be prompted to find out more information by these people who they follow very closely and they trust. So we do work with that crowd. We have a software program that has helped us automate the engagement with these influencers. So it's a really exciting time, and beyond sort of the programmatic advertising that we've been sort of focused on in this conversation, the influencers is another area that's creating some incredible opportunities.
Sure. Dawson, you guys using influencers?
Not a ton actually, and so I'd love Richard to pick your brain later. But you did mention one thing that kind of
anytime
it sparked another thought that I had. So you were mentioning people searching, obviously digitally searching for credibility, and one of the things that we try to do and would highly recommend an issuer taking a look at is just doing a Google audit on yourself. I mean, maybe it's the principal management, maybe it's the name of the fund, but just looking at what's coming up in Google. And really, we call it digital monopoly, but trying to take over, that first page of Google. And that could include, some influencer, maybe some guest blog articles we've done, a lot of podcasting. So not necessarily, Instagram influencer type, but allowing people to get on an interview with a podcast or potentially ad space on a podcast. And that's been really beneficial. So that was one thing that came to mind when you mentioned the digital searching that people do. Is just be aware what's out there, and not that you're trying to hide anything, not that you're trying to make up anything, but you're just trying to capture that Google real estate as best as possible.
Yeah, and when it comes to SEO, sorry, Jason, when it comes to SEO, I mean, we do know good content that's being followed, content that's being opened and shared and liked. All of these things does get good sort of, SEO, gets good placement on Google searches and such. So 100%, you want to do that. And it's going to be led by good, strong content that people will follow, read, leverage, share, spend a lot of time on. That's what the search engines are really sort of looking for these days. Their algorithms are just pounding on stuff that, when they see good metrics, it's going to rank high.
Absolutely. When I look at content marketing as a whole, and I know we're focused mainly on the development side right now, I have another question about white papers and different types of content formats. But when I think of content marketing, code for offsite SEO, search engine optimization, it's the creation of good, engaging content. It's designed for social shares. It's designed for high authority links from publishers, from influencers, from various types of blogs or groups. Linking to it. I've seen email newsletter extensions to some of this content that's living on the web. So glad you brought up SEO there, Richard. This can definitely have a strong impact. And a lot of the times I'm looking at short timelines for, let's say, a Reg CF campaign, but I point towards 12 months for a Reg A+. And I know there's different perspectives on that. But I definitely want to see issuers hitting their goal. If they're able to hit it quicker, fantastic. But you can have a real search engine impact in that 12-month window of time.
100%.
Yeah. So definitely be playing for it. Richard, I know you had brought up white papers, financial publishing. I believe you even wrote a book. So you can definitely speak to this matter in a very authoritative way. What types of content can be part of the content creation and part of the content marketing, part of the campaign as a whole?
Yeah, I like, different types of content. So, we know we've seen the stats on video. We've seen the stats on infographics. Visual elements are good. Lots of words, generally not. But when it comes to white papers, when I started my career, white papers would be 12, 20 pages of third-party research. And it was, really for the not too faint of heart to sort of go through it and really, leverage that piece. We started extracting it because, as the world moved online, people's blogs, you could use a white paper where you could do a series of blogs based on the exact same information, or you could take the blogs and leverage it for a white paper, vice versa. I just like different types of content because it's always interesting to see what people are using, what they aren't. So you build a video, and videos are pretty quick to sort of write, storyboard, and produce at this point, do voiceover, soundtracks, and those types of things. We can get them done pretty quickly. And then supplement it with a white paper, blog articles, newsletter, e-blast, and those types of things, just to see what's working. Again, A/B test, see what types of content, where people are going for it. I never thought I'd be, talking to social influencers on TikTok and Reddit, but if the last 18 to 20 months have taught us anything, the retail investor is going everywhere, and they're really moving the market, or at least it seems like they are. So you want to access these individuals, and again, access them the way they want. Some of them may be serious readers, so you can give them a 5-page white paper, and maybe they'll pour through it and really sort of remember a lot and take a lot away from it. Others may say, give me a 30-second video, just tell me what I need to know. So we recommend trying all of those, different types of content. Like I said, blogs can be great because they're 300 words. And then, you can put a bunch of blogs together, and we do this all the time, and build a, sort of a heftier piece, like a white paper, or take the white paper and break out paragraph by paragraph for a blog and just drip the information out. It really depends on sort of what type of approach you're trying to take. And if done well, you should hit a lot of people. Like, a lot of people should look at it, use it, share it, like I said, like it, comment on it, all of those types of things. And at the end of the day, there's a nice awareness and engagement with your targeted investor, audience, investor, whatever it is. And they will look to you as the leader. They will see you as a real force in the cannabis sector.
Yeah, and I love how you pointed out the splintering of the content and being able to use it across different channels. For anyone listening in asking, why are they talking about content? Why not just focusing on ads? It's generally a 7 touch point or more process before an investor converts. Yeah. So as Richard's saying, if they're searching around your top listing, or just searching you by name and seeing all of this content, thought leadership, and your brand's physically positioned at the forefront of the vertical, it's going to say something. We'll also do the opposite if you don't have this content. Dawson, do you want to elaborate on that further? Different types of content that you've seen to be key drivers or to get a higher level of engagement from prospective investors?
Yeah, and before I start that, I just want to echo your 7-point touch, because it's something that we try to preach over and over again, that, it's not just going to be one blog that, potentially, you're going to have your early adopters, you're going to have your people that were already following the brand, or, one of the principles and something like that. But for the most part, you're really having to take these people on a journey. And so it could be a 7, 8, 10-point touch journey. And so, one of the things that we tend to talk about, and I've learned, I don't even remember who said it, but people that listen to podcasts, they listen to podcasts. People that read blogs, they read blogs. So you have like these different segments of people, and they tend to hang out in the same area. So someone, that maybe loves to watch videos on YouTube might not spend a ton of time with podcasts or with blogs or with, another form of content. So I love what you said, Richard, about, breaking it apart and using it in different areas, because you can really tap into all these different channels without having to recreate the wheel. That doesn't mean you just, take a YouTube video, transcribe it, and throw it on the blog, because it's, for a blog reader, that's not going to make sense. He's going to be going, wait, this wasn't very well thought out. Same thing with, taking a video, pulling off the audio and throwing it onto a podcast. Someone there is going to be like, wait, this doesn't make a lot of sense. But you can use the same style of content. You can use the same topics. You can use the same, just direction that content is taking someone in multiple channels. So I think, it's not just, focusing on one single distribution channel. You really, if you think of podcasts, that's the new radio. You think of YouTube, that's the new, TV commercial. So you've got to get on all these different platforms to really get the word out. But absolutely love that point.
And thank you for mentioning that, podcast, webinars, and speaking to investors. I regret having not mentioned it, because you are totally correct that is, again, such a strong engagement. And yeah, Jason, I mean, in terms of, the ads are part of that. It's the first thing they see. It has to be catchy. It goes back to what Dawson said about sort of the headlines. It's so important. Good imagery, good words on the ad, an easy link, an easy click through. And again, you hope that they take the tour with you along those 7 steps and 7 touch points, because and to get them to do that, you need, like, again, I always go back to good content.
I agree. And we have a system where we're interviewing founders, taking video clips from that video content, transcribing it, creating articles, tapping into their voice, tapping into their expertise. And I want to talk about distribution. We've looked at some self-publishing channels here as well too, but how can a cannabis issuer get more coverage? How can they be a guest on podcasts? How can they be showing up on cannabis business blogs, on investment-focused blogs, investment-focused websites, various types of entrepreneurial publications, as well as equity crowdfunding, investor email newsletters, overall finance, retail, even accredited newsletters? What are some processes that they can use to get the most out of their content across their own publishing channels and tapping into others? Just to add one part to that question, I publish articles, and if I see 100 or more links on my articles, I'm going to get a whole lot more traffic than if I get 5 links, 10 links. If I only get a few people talking about that content on Twitter or wherever it may be, how can we stimulate that? How can we get more coverage of content?
I mean, from my vantage, I'm actually interested to hear what Dawson has to say. From my vantage, we always say, look, I'm not a great host. You're way better at this type of thing than I would ever be, Jason. So, I mean, I should not be hosting a podcast, but I can be a guest on a podcast. I can be a guest on a webinar, right? So to me, it's you start with reaching out with good content, seeing who would be good partners, like this, frankly. And then you say, how can we create something ourselves? If I'm not the right person, maybe my business partner is the right person to host a podcast, but maybe she goes out and is a guest, and it becomes sort of a bit of a virtuous circle where it's like you help other people, you ask other people, because we all have contacts, we all have specialties, we all have ways where we can bring synergistic skill sets and knowledge and ideas to the table. To me, it starts by getting good content out there, getting interesting things, having something to say, or finding good third-party research to share, and getting noticed by other people, or reaching out to the people who you think might be able to leverage what you're doing, saying, talking about. If they have a podcast, follow them, comment on it, reach out to them, all of those types of things. And that is sort of how you get invited onto sort of their podcast or webinars or whatever it is, or included in their newsletters, and vice versa. They have to see that you're sharing good information. You may be sharing their information, opening doors for them. And then it becomes, so as a cannabis issuer, if you have a very interesting product, you talk about the need and you get it out there, and you share a lot of third-party research, you should garner the type of interest and that you're hoping for, beyond having just going to a PR agency and spending money to get them to put the CEO in their next publication.
Sure.
Yeah.
I like how you mentioned that beyond just doing that. You can work with a PR agency. There's a lot of great ones out there. Some brands aren't ready for it, and they have a story about how a PR company didn't work out. It should be a combination and should be looking at some of your own distribution channels.
Exactly.
Dawson, what are your thoughts towards distribution?
Yeah, Richard, I loved what you said just about, kind of reaching out and offering, some give and take there. I think so often, it's so easy. We've seen, principals and management, maybe they started out on their own before they, brought us on, and they've, they cold emailed, 10, 15 podcasts and, didn't work. So I just quit and didn't do it. And a lot of times it's just a matter of taking that little extra bit of time, go listen to, the podcast that you're reaching out to, listen to the last episode, mention what you liked about it. Tell them, maybe they just published something else and ask if you can share, a link to that on your own blog or your own social channels. And I think it's just building that relationship before you start asking, hey, can I be on your show to promote my product? And I think so often with marketing, it's so easy just to make that assumptive reasoning on why they would want you on their podcast. And you'll have some people you can cold email and they're looking for guests, and that's, absolutely. And that's another part of it is don't quit once you've cold emailed a couple of people and think that it's not going to work out. It's just consistency. And I think that's, one of the other things that I would say on this topic is just, it's just consistency. So when it comes to publishing content, be consistent. So if that means once a week, if that means, maybe all you can do is once a month, whatever it is, if you're consistent and you're showing that to other publications, other distribution outlets, then they're going to see that you're serious and not just trying to use their platform to for your own advantage. So, and then there's obviously, you can pay to play. You could buy ads if you want to do it that way. But we found that organic content of the interview, investors just connect so much more with that. So, but yeah, I love that point of just not just trying to take everything, trying to give back a little bit first before you ask.
Great recommendations, great insight there. You started touching on advertising a little bit. I know we spoke to it earlier. One thing that is relevant for this vertical is cannabis as a whole could have some additional obstacles for advertising. If we're running campaigns on Facebook, if we're running campaigns on programmatic platforms, as you mentioned earlier a bit, Richard, which basically means running across a list of websites, apps, different bidding technology to optimize and get the best performance there, of course. Have you guys run into any obstacles? Are there any best practices for running an ad with the word cannabis or similar word that could be disapproved on any of these systems?
Awesome.
Yeah, that's a great question. And honestly, you might have a little bit more insight on that. But what we've, the research that we've done and what we've seen on our end, so I'm not going to speak for everybody, is you're really trying to educate and not talk about the product or selling cannabis is a consumption product. So you can't just go on Facebook and throw out an ad to come to the dispensary and buy XYZ product, from what we've seen. So a lot of it has to do with just the education side of the investment opportunity. Maybe it's about let's just say, for example, how the farming happens, or how the product is harvested, something like that, to where you're not actually trying to sell the physical product. And that's kind of the baseline that we've seen that's not crossed over that Facebook jail time.
Yeah, and I completely agree. All I would add to that is you can target, when you're going out with these, this type of ad or content or whatever, there are areas where you can go to target the types of investors, cannabis websites, people who like relevant companies, distributors, advocacy groups. There's plenty of places you can go to sort of mitigate the kickback from going to the places you cannot go. So there are going to be some places that are still off limit, which is why, again, digital marketing, doing the A/B testing, doing that upfront strategy planning is so important, because you don't want to waste a lot of money and time where you shouldn't be.
Especially if going through multiple revisions to get an ad campaign live, it could really make a dent in the first week, first month of the campaign. We've found compliance systems to do it, and similar to what Dawson is saying, is focusing on the offering, the education. It may require some backup accounts, may require getting in touch with the rep, but ultimately following the rules and not mentioning words that can get things disapproved. The images, the video have a lot more leeway as well too, but a lot of compliant ways to go about it. And Richard, yes, being able to put together a site list and upload audiences there. That may speak on the negative towards advertising. Let's talk about the positive a little bit. Why advertising? What's available for an issuer there by running campaigns? Is it just to get awareness, or how do those numbers equate for a spend and what is ultimately raised?
Yeah, somebody was saying earlier, it's hard to raise capital through a RegA issue. We know that, I think about a quarter of them hit their targets, right? This is how this awareness is just so important. It's a bit of a spray and pray type of, you are going out to a lot of people. You are trying a lot of different strategies, a lot of different content types, a lot of different, maybe even audiences. Maybe you adjust your audience. But the outcome is an awareness that you're not going to get by going out to friends and family or to contacts or to people who may have come across your website or a piece of content or an interview. It's so important to be out there, to build awareness about the industry, about the company, about the products, about the people, about the philosophy, all of these types of things. If you don't go out with it, people are not going to find it. And we haven't, I think we're sort of running low on time, but we haven't even talked about sort of budget. And when people do a capital raise, when a company does a capital raise, you have to, take your brand awareness, your investor acquisition strategy, your marketing as part of that capital raise. People come to us and say, how much should we be spending? We generally say 8 to 10% of your capital raise should go towards marketing. It doesn't all have to come to us. It could go to PR. It could go to other, types of efforts. But you do have to allocate capital to this, and you have to allocate time, and you have to be, in front of people. And this is how you're going to have a successful capital raise. That's to me, it boils down to that. That's as simple as I can state it. You have to do marketing, or people just aren't going to find you.
Simply building does not mean they will come and be able to hit the goals necessary. You could be intentional with the advertising traffic and how that scales up.
Correct.
Jocelyn, similar experiences with what you're doing?
Yeah, absolutely. And I'll be quick. I know we're running short on time, but I would just say, to mimic what Richard was saying, just the idea that you could go out to friends and family or people that you already have on your list and really fine tune your story, fine tune your messaging, fine tune your content. And then once you have that dialed in where people aren't asking questions, the same question over and over again, where you need to answer that question first, now you can go and really use ad campaigns to scale your campaign. So, we really look at it from that perspective of there's so much work to do on the front end before you ever jump into ads. A lot of people want to just jump into ads because they think they can, go spend, $10,000 and then boom, their raise is done, And so it's one of those things where, and that's the other thing is it is a process. So there's going to be testing, there's going to be tweaking. It's not, typically you don't hit, the golden ad on the first run. You've got to do a lot of testing and tweaking and dial that in and optimize it, just like you were saying. And so I think that would be the only thing I would add to that is, and Richard, to your point, don't just go try an ad for a week and then say that paid ads don't work for you. Find someone that can really help you dial those in and get that done right, so you can see the rewards from it.
Excellent. And the last thing I wanted to cover, I think we have about a minute left, so maybe speed round here, is any thoughts on the funnel? Do you drive traffic to the offering page? Is it an email sign up, an email drip to follow? Is there any recommendations that we can add about the funnel for listeners?
Dawson, you want to start?
Absolutely. So, I mean, what we do personally on our side is we typically drive them to a landing page that's going to ask for some type of email opt-in. So we're not driving them directly just to the invest now button, although that can be, that can work. And I'm not saying don't try it, don't A/B test it, because we A/B test everything. But on our end, what we try to do is just get their information, get their email, and then use that as a drip campaign to set up the nurturing, the education, the really, driving home the credibility and letting them learn who the issuer is through that process. So Richard, anything you would add to that?
Not really. I mean, that's exactly how I would do it. I mean, you want to get them to sign up. You want them to download an investor deck or to be emailed an investor deck. That's that's an acceptance that they're giving their email to you. So you have some contact information. So if the issuer wants to do, can do some lead gen, that's a starting point. Maybe they have the geo location or sex or name, email address. That's a good start for lead gen as far as we're concerned. So I think everything you said, Dawson, was spot on.
Excellent. And echo everything you gentlemen are saying here. I think any listeners, any founders, anyone working with a founder on the structure of their campaign, if they follow all these insights to a T, they have a very rounded out approach to what makes these campaigns successful and in the cannabis vertical. So appreciate all the responses today. Glad we were able to have this authentic discussion based on what we're seeing in the field.
Perfect. That was great, guys. I mean, the cannabis obviously has so many different challenges. Obviously, it puts you guys in a lot of the pressure. I'm gonna leave this with you guys. In the traditional capital raising, when companies need to raise capital, all the pressure is on the broker dealer. I'm not diminishing their role here whatsoever, but all the pressure was on them to get to deliver. The pressure now is in this new found sector, investor acquisition, because you're the one responsible bringing all that traffic for the broker dealer to vet in properly. And so kudos to all of you who are navigating that. And more importantly, as you constantly hear me saying, this is an evolving sector. What might have worked 3 months ago may not be applicable today. I think I heard one of you saying that it is forever changing. You got to be doing ABC testing. You got to be trying. The latest thing that I've been telling people, it's like a relay race. You have different runners, and changing even the look and feel every 3 months of your landing page could be enough for stimulating to encourage investors. So thank you, Dawson. Richard, it's great to see you again. Love the hair. And Jason, thank you. You pulled it up as well. I really appreciate this, gentlemen, and look forward to speaking to you again. So as you're going through the journey, as you're noticing this afternoon, we're walking you through the entire process from, hearing from the lawyers and the auditors, the broker dealers on how to get started, the preparations. You heard the nitty gritty and all of that. And what, I accidentally kicked James off. I'm bringing him back in. Sorry, James. It's not intentional. He's going to get me. I know it. Oh, boy.
You're always messing with Jim anyhow, right?
I know, but I feel bad because he's been such a great, yeah. I am sorry.
I'm back.
He's
back. Yo, messing with you, Jim. Don't worry.
I didn't lose audio. Don't worry.
The interesting thing is that as you hear the different speakers and panelists, you kind of hear that you can talk about the past, but it's evolving over time. So many different things are coming up that a lot of people didn't anticipate. So we walk you through this, and it will be continuous, this education. So the next chapter after, with the investor acquisition, your lawyers and your broker-dealer, your escrow providers and IRA providers and all that, now you're going live. And this is what it takes to be live. I'm really excited. I have so much greatness for this individual. I rely on him a lot, and he knows that. And I'm forever grateful for the time that he often gives me. He gives me when I need guidance, assistance. He's always been there. You know, for those who are listening in, the capital raise, the broker dealer may not play a role in the front end, but I'm going to tell you, if you want to vet in 4,000, 10,000, 20,000 shareholders, you need a CCO like Jim there, who has to be agile, work late hours, and be flexible. So Jim, Julian, and Amanda are going to walk you what the live experience is. So I leave it to you, Julian, to lead us off. Enjoy the chat.
Great. Thanks, Oscar. And hello, everybody. It's been an exciting few hours so far of, this cannabis industry. And as you could tell from some of the discussions that were happening, a lot of interesting things are going on. The cannabis industry is kind of getting that resurgence, and a bunch of different key partners and players in the industry are really focused on helping these companies succeed. So with us today, we've already had a bit of an introduction, but Jim, why don't you take it away? And I promise not to hang up on you.
Hey, everybody. I'm Jim, CCO at Rialto Markets, and I can't do it without Amanda's help. So here's Amanda, guys.
Thanks.
Hi, everyone. My name is Amanda Grange, and my role is a transfer agent. Specifically, I work with KoreConnex, and through KoreConnex, I work with people like Jim. And Jim, it's great to actually see you today instead of just those 2 a.m. emails I get from you. I try very hard to respond. So today you'll learn a lot about what my role is as a transfer agent once we get going. And I couldn't do my role either without Julian, who supports the transfer agent side of everything. So I'll just turn it back to you, Julian.
Great.
Thank you.
Much appreciated. Thanks for that.
Mm-hmm.
Yeah. And so today I really want to kind of kick off this discussion a little bit in regards to essentially from a going live perspective, when companies come to the forefront and are ready to, say, engage with Rialto Markets. Maybe, Jim, you can take us through that early step phase of what you're looking for with these companies, these individuals, maybe that early screening before even the compliance aspect. Maybe that's a good place to start.
Sure. For us, the sweet spot for when we do meet an issuer, it's one that, has worked with their lawyers, may has even, companies like CrowdCheck, has their filing, at least ready to go or being reviewed, has their audits done, the heavy lifting and the paperwork that goes with the 1A and the filing. Because technically we, as the broker record replacement agent, we don't get involved in any of that. We're looking to take them on once those steps are completed, and we can get a clean due diligence, that's handled. And they come to us and they say, okay, now we need the services in order to make this offering happen. So while we work in tandem with that filing, because we have to do some filings with FINRA as well, it's good to know that almost all the ducks are in a row. Let's be honest, nobody's ducks are ever all in a row. And this, something like a Reg A or even that Form C for Reg CF, they're beasts of forms. They're not made to be simple and easy facts forms. There's supposed to be a lot of disclosure and information so that these investors can make an educated decision, and so the issuer can't be held for not giving them all the details. And that's basically the forms are up there because they're there to protect the investors. And on the flip side, while they don't say it, it legally protects the issuer if they, when they disclose everything. So for us, it's great when, they've selected, maybe they haven't selected other players, they're still looking for a TA. We know KoreConnex. You need an escrow agent. Usually we can help with that. I only bring this up because of the space from the vertical we're talking about today, cannabis. Sometimes there are some players in the ecosystem escrow agents or even credit card providers that may not want to, they just regulatory wise, they can't participate. So, while some dissect it a little too, they don't touch the product, but they'll deal with the real estate where it's grown. We always have to check with those providers, but those are some little bumps that come up. So, one little tip for issuers in this space is, know you have a million things going on by trying to get this thing off the ground and running, but if you have any ins with your business so far as in dealing with credit cards by chance, that might be a helpful thing to bring if you have it. If not, we go to the ones that we know and we make the petitions and try to explain, but it may be an issue. So
Yeah,
just want to touch on that point.
Those are good points for sure. Yeah. I guess as a follow-up to that, is there any more scrutiny or anything else that a cannabis company might experience in terms of, that initial, look at what you're looking for initially before they get even started? Like, is there anything that you need to kind of vet in terms of the individuals, making sure they don't have any, past, bad history or anything of that nature?
Part of our due diligence process does include the bad actor questionnaire. So all executives, directors, we will vet them when we want licenses or passports. We want to make sure you are who you are. We do an AML review, PEP screening, adverse media, all on our own, so that we can get our own information and background checks and things on, so that, because we don't, firms can get in trouble for bringing in bad actors. Yeah. The bad actor questionnaire is something the SEC requires, just because they want to make sure that no one's involved. Now it's something that the issuer fills out, or each executive that's on the filing fills out and attests to themselves. We do take that in. What I really love as a broker, as the broker dealer, is when there's a legal service involved or something. I'll pump them up to crowd check. If I can get the crowd check report, it's a very nice report to have, and it covers a lot of bases. And it's not there's no get out of jail free cards anywhere in this business, but this one carries a lot of weight, and it's very helpful to have that in your pocket to say, no, here's a very thorough due diligence, in tandem with ours, and it can give us the comfort to say, we can move forward. Now that being said, this is what we do for everybody. So there's nothing different that I do just because someone's involved in cannabis versus the filmmaking industry or real estate or cars. So
right. Okay, good to know.
That's how I look at it in reality. Yeah. So everybody's getting the full review.
Yeah, absolutely. And I think that's important for the integrity of the industry as well. I mean, as we're raising capital and dealing with obviously the investor protection side, you want to ensure all the people that are coming into the market in this ecosystem have that level of trust and worthiness, I guess, to be dipping into the crowd, so to speak, right? So that's great. We also touched on some of the neat aspects of having some of these ducks in a row in terms of the payment providers and all of the escrow bank providers. One important thing to note as well, I know in some of the work that you've done before and work that we've done with other key partners in the industry, is that it's important to look for those technology, I guess, providers that have the ability to connect agnostically and be nimble in terms of the technology they work with. And this includes the partners, the banking infrastructure, all of the payment rails that will be necessary to enable the investors to actually invest by different methods. And that's something that I would say, just to your comment before, is really helpful, especially if you're thinking of, continuing on from an early Reg CF raise perhaps, and then going on towards a Reg A at some point. Just having that infrastructure in place, working with partners, as we've heard on other panels that have done it before, those are all important things, right? So I just want to make note of that. Now, Amanda, over to you. in terms of the transfer agent side, maybe describe a little bit about what keeps you up at night and
Jim.
Yeah, besides Jim, and how that process looks like for companies. What is important for them to understand about the transfer agent side of the business?
Well, a lot of companies don't even understand the role of a transfer agent, what a transfer agent is. That's one of my biggest questions that I get asked, especially even somebody will ask me what I do. I'll tell them I'm a transfer agent, and everybody will say, well, what is that? And then I'll say, I manage cap tables. Well, what's a cap table? So companies, when they do fundraising, people purchase shares, which come in the form of different types of securities. And so my job is to manage those securities, which make up the cap table for companies. And I manage that not just for the company, for the investor as well. Investors want to see their securities. And they want to be able to transfer them sometimes and want to know what they can do with their investments. So my job is to manage it for the investor and for the company. So to help a company know where they're at any moment in their raise. So if they're raising 50 million, they're going to want to know how close they are to that. And so my job is to be able at 2 o'clock in the morning, when a company reaches out and says, I'm almost there, or am I over, or where are we? My job is to just manage that and make sure CEOs know where they're at any given time with their raise. So that's just a short version of what my job is. But yeah, and then a lot of issues. A lot of investors will have issues that I'll have to help them understand. A lot of people invest in companies and don't even really understand what it's all about, and so they'll come with questions like, I just invested in a company, and what does that mean? So I'll answer questions like that and different things, and then but mainly really to work alongside of the companies and help them manage their securities.
Yeah. Now here's an open question, I guess, coming up next is what are some of the things that a company, can do to help, I guess, assist this role or mitigate some of the questions, maybe even like prepare their raise in such a way that, they can have all the information up front. Obviously they're going to do a lot of this in their filing, have all of this transparent and disclosed, but in terms of the actual support materials that a company could use and leverage from a compliance and from a procedural standpoint, what are some of the things that you see where that could help?
Right from the start, when a company is getting ready to apply for a RegA raise, or one of the biggest things that companies don't realize is how important their historical cap table is, to have that up to date, and to know where you stand as a company, a snapshot of your investments and for your company, how much you've raised, how many investors you have, how many shareholders you have. And so really managing that right from the beginning before you go into a raise is really critical. And a lot of companies, a lot of CEOs don't know that. And they'll get caught up in getting the raise, going live, and all of the time is spent on going live that they don't manage their historical side of their company, which is critical as well before you do go live.
Absolutely. And then I guess just breaking down, or Jim, if you wanted to add to that too.
I wanted to agree with that because, Amanda and I, we hand in hand, we help out a lot of these retail investors. I get phone calls as well, sometimes scary as the CCO. They're calling me, telling me about a company they just invested in that they may not really understand what it's about. I do chastise them sometimes and say, you're supposed to read that 80-page report before you, and they all go, and it's not like I'm going to take the shares away from them at that point because they said that, but the education, every time you do get someone on the phone, not try to mansplain, but try to hear their question and then just give that little extra tidbit. When I do explain to folks that they can come onto the KoreConnex platform to go and view their shares, I always just say KoreConnex, the SEC registered transfer agent. Now, not everybody understands what the transfer agent is. And sometimes I even add in there who manages the cap table or share ownership records, just the few buzzwords that they go, oh, because sometimes they see another player and they go, well, that's another phone number I got to call to get information or another email. So, whether they ask me a yes or no question, I tend to try to just put a little more info in there, because hopefully the next time they'll come back and they appreciated the service, and they will come back, they'll know this stuff, and this will be one less question or someone I have to deal with. And the idea is to democratize this whole thing for everybody, so everybody doesn't get these rules. So we don't want them participating if they don't really understand some of these things. So it's our job, and I'll even say it's the issuer's job, because the more little bells and whistles or lights you can turn on for them in the process, the more comfortable they feel, which they should, because you've hired regulated players in the entity to make this a compliant and regulated offering. You didn't just do this on your own.
Correct.
So that was my extra 2
Yeah.
cents. Sorry.
Absolutely. No, and that's great, because as you mentioned, it sometimes isn't a common understanding of what is a cap table, what is an SEC registered transfer agent. Using those buzzwords, like you said, as who is managing the ownership of those securities that you've issued, that can trigger the bell and say, oh, right, we have a registrar, or we have this or that. Sometimes it's handled by different types of entities, but really breaking it back down, even to the simple format of what is a capitalization table, a cap table. I mean, it's really the source of information on the equity that your company has issued to shareholders. And so there you'll find a lot of information. And this information is what, for example, Amanda would be handling on the KoreConnect's transfer side. And it includes having all of the key information on the purchase date and so on. I mean, Amanda, you can speak to a lot of those columns better than I can, but what are some of those?
Yeah, and that's right, Julian. And a lot of times companies don't know the critical information, what's most important, and each security has different information that's very vital to keeping track of those securities. And a simple share, you need the actual closing date, the transaction date. A lot of people don't know what the transaction date is, that it's not the date that you initiated that transaction, it's the date that it actually closed. And the quantity of your shares, the price of your shares, and how much your total investment was, those are all things that go into the cap table and managing your shares. And then promissory notes or options or anything that has an expiry date, it's very important that you have a transfer agent that is on top of those and knows when securities are expiring, and is making the companies aware and staying on top of that for your investors and for you yourself of when things will expire, and initiating those processes.
Absolutely.
And if I can add to what Amanda's saying, one thing extra is Amanda's got all the email addresses and phone numbers for everybody who owns your stock.
Exactly.
And that is one of the biggest important things for me, because as we're talking about education, and even if it's not education, if you need to speak to your shareholders, if there is a change in anything that's going on, Amanda's the one who gets to speak to all, and I don't mean that, but that is huge. Your own, your own historical records. Let's be honest, sometimes we see CEOs that have written these on napkins. So things may not be as organized as you need. And when you're looking for these crowdfunding raises in Reg A and looking to add 2,000, 3,000, we just did one for over 4,000 investors. That's 4,000 more names and emails and addresses that you need to keep. It's not, unless it's in your wheelhouse as an issuer, this is what you use the TA for. And to me, one of the beyond, keeping track of those things, the ability to communicate with those shareholders. This is just Amanda's the megaphone here to get that message out. And that's a big deal to me, as for someone who sees issuers needing to educate, update, or inform their investors.
Yeah, absolutely. And even a step further from what Jim was talking about, not just being able to communicate with your investors, but a transfer agent also manages your annual general meeting. And a lot of CEOs aren't aware of that. And if you have a good transfer agent, you'll have a transfer agent that will make you aware of when your annual general meeting is and when it's coming up and what the requirements are for that. A lot of people have no idea what you have to do to host an annual general meeting. And there's a lot of preparation that goes into that before it even comes to that day. And the transfer agent actually is the one that manages it for you and is a part of it and runs the whole meeting for you. So you as a CEO don't have to do that. So if you have a good transfer agent and a place where you can contact all your shareholders at one time and make them aware of the meeting coming up, and if you have anything that needs to be voting and your shareholders need to vote on, if you can reach out to your investors in at one time, and they can vote online, that type of a process, that's valid to a company, I think.
Right, absolutely. Yeah, so definitely pulling this discussion all back together. I mean, really, we talked about getting to the issuance stage, selecting the key partners, ensuring that you've got the partners that have obviously had some experience in this area and offer all of the different, I would say, elements and features that you'll need. I mean, Amanda just mentioned some of the added value kind of key things that exist in the marketplace, and not all perhaps transfer agents are created equally. Asking the questions, does your platform or does your service include the ability to have, to host AGMs? Does it include the ability to, transfer shares unlimited with no fee, no additional fees? Even from a compliance standpoint with Jim, we talked about the broker dealer, ensuring that, they screen thoroughly for the bad actors check. And in this day and age with our SEC commissioner right now, you want to be sure that you've got those T's crossed and those I's dotted, right? So that is also, an extremely valuable, service, and not only at that beginning stage, but throughout when you're accepting investments online. Are they suitable? Have they passed all of their KYC and AML? Obviously, making sure that each investment is appropriate in terms of how they answer their suitability questions. But all of that really comes to the forefront. And so when a company today is coming to the forefront and raising capital, these are the type of issues that need to be brought to light and questions that need to be asked of their technology providers and key partners. So Jim, on that note, I mean, in terms of the infrastructure and some of those rules that will, and I guess additional benefits in terms of Rialto markets, maybe walk me down that path in terms of, I'm a new issuer, what can I expect out of the gates with Rialto markets?
Sure. Once we figure out the terms of the agreement, what kind of service level Rialto can provide, whether we're reaching out to investors that haven't completed an application, or whether we're just, giving the issuer a list of social security numbers or date of births to chase down for us. Once we sort that out, then we get the process started. We take the due diligence. We go through that. That's usually not a long process, within a couple of days. And like I said, if you come in with a crowd check report, it'll probably be even quicker. We get started with the 5110 filing. That's the broker's filing with FINRA. FINRA wants to know what those commissions that we are lining up for will be, to make sure they're in line. And they also want to review the offering circular to make sure that the agreement matches up with the offering circular, matches up with the things I put in that 5110 filing. And usually when you work with firms like CrowdCheck and the lawyers that set up or file your 1A, we'll be in contact so that we can give you the language, or work with the language that needs to go on the front page. And I believe the plan of distribution, don't hold me to that, that would say what Rialto's commission is and the services we are, so that the investors are fully disclosed of what penny or percentage of every dollar raised is going to who and to where, to explain the expenses. Sometimes that FINRA filing can take, it's taken me a month or two at sometimes. So it can also be a bear, and it's just, most of it is because FINRA is underwater and the reviewers have a limited amount of resources. I'd like to pick on them for that, but that's life. So we got to deal with that card. So I try to get that in as soon as I can. We do need to get that fee from the issuer for that. That's usually, it's 1/15% of the total offering plus 500. So it's from $2,000 to $6,000 generally on the rates we've been seeing. Then there might be blue sky, whether you ask Rialto to handle that for you, you handle or the lawyers or your service. The states need to be notified in a Reg A, so we've got to send the states filings, and we also have to pay them a fees because they want their fees. So that's another next step. And as we're doing all this, we're waiting for the SEC to qualify the deal. The SEC won't qualify a Reg A offering until FINRA has signed off on that filing that we did with them. Once that happens, then the SEC's satisfied with everything else. They'll qualify it, and we can turn that invest technology button on that we've placed on the landing page. And that's when we start getting involved with the back end. We start receiving all the applications. My team goes through them. We check for like identity, AML, all those things. We want to make sure that the subscription is in order. And inside of that, we're also getting phone calls from these folks that are saying, I don't know how to click a button, or I can't enter. It's reality. It's retail investors. Some of them just don't know, or the phone might be weird for them that day. So you help them through. You explain what it is. You take a little chance to add a little more, knowledge or nuggets of info for them to feel more comfortable in this process. And after a while, sometimes it does take a week, 2 weeks. We do say 14 to 30 days, just to be general and vague, only because there are problems with applications. People don't put their right email in. So we might be trying to contact them for 2 weeks, but they decided to write AOL.com instead of Gmail that day, and we have no idea how to get in touch with them. So, there are little issues like that you try to hammer out. But if everything works well, sometimes investors could be closed within 3 to 4 days. And that 3 to 4 day lag time, that's generally the funding and what the money sitting at the escrow. So while the investor may see money come out the day they put their application in, because we were able to do the review that quickly and initiate the funding, those funds still have to overnight get to the bank, and then the bank, the escrow account that is, has to say, all right, let's sit on them for a couple of days to make sure that they are free and clear, that this isn't a mistake or clawed back, because that is an issue too, with investors just deciding, changing their minds, or claiming credit card fraud. This wasn't me who filled out an 8-page application with my social security number and cell number. So sometimes these things come back. So it does take a little time to close, whether depending on how well the application goes. But once we do that, we hit that final button, and then that information goes to Amanda, and we put another one on the cap table. And that is a very high level of the steps to expect. But
that makes sense. Yeah, thanks for that. The one of the things that came to mind as well, I mean, obviously we're talking about cannabis today, and I guess cannabis related companies. Are from a compliance standpoint, to your knowledge, what do companies have to watch out for, in addition to perhaps some of the regulatory do's and don'ts of the industry, in terms of their ads, when they're putting out ads or promoting the offering? I mean, obviously there's going to be a level of state and federal law regulations, I would imagine, on what they can and can't do in terms of the imagery, maybe some of the language around that. Are you reviewing that as well, or is that part of their legal side, perhaps?
You know what? As part of our services, we will review marketing material, but we do that more from a FINRA and SEC standpoint, less from a legal state. Banking hates some kind of industry, right. So pictures and things. What would I look at is to make sure you didn't put the word in, FINRA approved or SEC approved, or this is guaranteed 100% return. There are buzzwords that marketers like to use that regulators do not want to see anywhere. So we give a review to make sure that those types of things are avoided. That materials, especially where you're going to use our logo, but that we're involved and we know are going to customers, are fair and balanced, and that there's nothing promissory in there. FINRA gives us Rule 2210. It's quite a lengthy document with a lot of guidance for us to take a look at ads and or things to make sure that they meet those guidelines. On top of that, the SEC, its difference between Reg A and Reg CF. There are rules about who can say what, when, and when being after the filing or before the filing, and they are completely counterintuitive. So just no knock on the SEC or FINRA, but don't bring common sense into these filings, into dates, and you think something that doesn't technically work like that. For instance, a Reg A, the issuer owns the site, and the issuer can advertise and market, but when you do that, you don't want to put things on your own site or use your own website. You want to keep it separate from your invest site. That is because anything on your website or anything linked directly to this one site could be seen as an addition to the offering circular. And if the material's not in the offering circular and it's elsewhere, well, then you're going to have trouble because you might have competing or additional materials. Because remember, it boils down to the basics: is everybody should all get the same information. Nobody should get more. So there's sometimes you don't even want the issuer to speak. But then again, there's like things like the Reg CF, where before an offering, an issuer can talk, but the minute they file that Form C, it's mum's the word. They can't have their website can't have the invest button on. We control the website when we do a Reg CF. We own it. We control it. It all happens under us. Any comments that are left in a discussion section we deal with. If an issuer does want to respond, we clearly respond, highlight this is an issuer answering this question, again, so that it's clear and transparent who's giving the information, so nobody's misled. That's that their main worry of being misled.
Yeah, that really helps, Jim, because I think the main points there is that anything related to that SEC offering, in terms of the communication and what's being said, that's broker dealer territory, so to speak, to review and help. Anything more related to the cannabis and related products itself and the advertising of that, if you don't have legal counsel for that, it might be a good idea to have that overview as well. Make sure that you're compliant on the product side and all that. And then I'm sure a lot of these companies that are coming to the forefront have already dealt with those issues, but it's good to just put that reminder out there as well. Okay, so we've got about 10 minutes left to go here. I'm going to kind of go through some of the steps and preparation, I guess, for in terms of Amanda, the cap table. What are some of the early stage things? Let's say a company has only gotten some of their founders to invest and maybe a few seed rounds. What does that early stage information look like? Where does it have to be captured? Is it as simple as an Excel spreadsheet and then getting it to the transfer agent? Is that maybe take it from there?
Yeah, well, I guess it's whatever format the transfer agent uses for their cap table. So for myself, example, yes, it's an Excel spreadsheet, CSV format. And what I would do normally is reach out to the company and I will give them the format that I would need to upload it to the platform that I use. And then once we've got that organized, it's a lot of back and forth between CEO and myself, because you're talking about people's investments. So you want to make sure that the data is accurate. So I spend a lot of time just analyzing data and making sure the numbers match, making sure they add up, making sure all the information is there. And that's not just for myself in my job to make it easier, but it's for the company themselves. They want to make sure that their cap table is accurate right from the start. So I'll go back and make sure that we have everything. And then once we have everything, then what I encourage the CEO to do is to reach out to their investors and let them know what's going on next and how they'll be able to view their shares and what platform we'll be using to view their shares and what date this will be happening. And so then that's why it's very important that the historical is done first. If you're a company that does, yes, is just a couple of friends and family and yourself and a few people, like a handful of investors in your historical cap table, it's not as important that they know what's going on. But if you're a company that's starting out with a historical cap table that has a lot of investors, and then you're doing a raise, and if that raise goes live first and we don't have the historical uploaded, you're going to have investors going, where's my other investments? So I see my current investment, but I invested in this company, and they're going to send me the forms, the subscription agreements, everything they had that proves that they've invested in the company. Where is that? And then you've got investors going crazy, like, hey, I see that my new investment. But so it's really important that, and that's why I emphasize that the historical is critical, that you've got that and it's managed and it's up to date on whatever platform you're using before you go live.
Right.
And
and that's really the key, Amanda, is you're saying, some companies that engage at certain points, they may have already done 2 Reg CFs
exactly
and a Reg A, for that matter, or a mixture of, and even had some seed rounds as well. And some companies are now even planning ahead and strategizing and ensuring they have employee stock option plans, right? So all of these different issuances of those securities need to be essentially, accumulated into one record transfer agent of record. And that's, in this case, when it goes to Amanda, her team essentially sifts through all that information, make sure that it's all quality and it has all the documentation, and then once that gets uploaded to the platform, now you've got a central information hub, if you will, for all of the securities which that individual owns. They can see their digital e-certificates, they can see their shareholder agreements and all of the corresponding uploaded information. But not only that, then it's about all of the features and functions accessible on that technology platform, I would say. So then you're looking at the ability to do transfers. Then you're looking at the ability to message and do investor relations on that platform for those companies. Because, I mean, Jim will be the first to tell you the name of the game today is transparency with your shareholders, constant communication, the ability to, as these investors become more savvy and as the industry grows, it's ensuring that you have that open dialogue and that two-way street, I would say, that encourages them to become your champions and your best advocates. I mean, what do you think, Jim?
You're right, and it's a brand builder too. I find that some of the questions I do get are reach outs from investors, or either previous investors or those who are just following that receive some sort of marketing from the company. It might not even be about the offering, but they looked enough to find me and knew there was an offering, and they're just, oh, hey, I've been following these guys, and now I just want to check in to see if it's real. And oh, you are a real broker dealer. And so the more you reach out, it keeps them excited, and I explain a lot too. Where can I see this? How well this stock is doing? And well, they're privately held. They're not. You can't just open up your Schwab app and see that it's trading without. I said, you're going to want to know when the company reevaluates. Then you'll have some info. If you can stay on top of those kinds of things, I find, and from the investors that are calling, and all spectrum, small, large, young, old, knowledgeable or not, you can feel the excitement sometimes from them being a part of what this is, and they feel like they're in the know, and sometimes they just want to talk to me about the product. And I have to listen, of course, and I take it in, and thank you, Mr. Smith. Yes, that's lovely information that I won't remember, but it's something I can feel during these conversations, and even emails. When you do answer a question via email or just confirm someone, you can see that they're sending it off of some kind of update from the company that they received. And so, hey, I'm looking to get into this, and they generally end them with super excited, or sometimes the investors think that I'm sitting there with the issuer, so they'll tell the president, great job. Okay, I'll certainly let them know tonight over coffee, but
Absolutely. We had one example the other day. I mean, I'll just end off with this note, and I know we're getting close to time, but 93-year-old shareholder, they came and looking, I called us up, hey, we've got these shares, I'm not very good on the online method, and just working with partners that actually want to be there to support these individuals of your company. How selecting those partners is so critical, because a 93-year-old shareholder that needs that extra support to help them get and find how to move these shares around. What a tremendous story. I mean, to have somebody that's still sharp at that age, but obviously have the partners there to support them. So I want to thank my panel. I see Oscar back on the line here.
Well, I just wanted to thank Jim, because Jim often sends me those phone calls and he says, hey, Oscar, somebody wanted to say thank you because you're a good CEO. But you're right, Jim. I really appreciate that every once in a while.
I got to post it with a couple to send you today. Yeah. So.
And by the way, thank you for those ideas. Thank you. I mean it. I love it. Look, it goes without saying that what you heard here today is what a real live activity is like, regardless of who the players are. But the important thing is we're interacting. The partners are working together. A lot of the times, all of us get on a call with clients and it seems overwhelming for them when there's 30, 40 people, but that's the internal crowd that it takes to get this to the starting line, and then while working through all these little intricacies. So thank you, all three of you, once again, for an amazing chat, and I hope all three of you had fun.
Thank
Jim,
you. Yeah.
As always, thank you so much.
Bye, Amanda. Bye, Julian. Bye,
Jim.
everybody.
Thank you. Bye, Julian. Thank you. Thanks, Oscar.
So, you're very welcome. Thank you. So now we're moving into the next exciting journey of any capital raise. So for cannabis companies, this is really interesting because, as most of you know, I'm Canadian, and so the route of a Canadian company has always been, and in cannabis, I can't tell you how many times it was always, at the beginning days, it made sense because the market is new, hot. And so, get some capital and do a reverse takeover and boom, get publicly listed. And obviously RegA does have that vehicle, certainly not taking that away. But we are big advocates of the private capital markets for many different reasons. Number one is where companies can build up their business. They can build it up. What do I mean by that? I mean, test and test your revenue models. Make sure that you got your revenue predictability every 2 years. That means when you get public, you're not going to get beat up. Yes, when you have exciting announcements, everything's going to spike up, but it can happen even privately. And in fact, there's evidence to prove that the bigger value in companies is when they're private. But now a new chapter open that I am excited about. I know, many of our colleagues, Itan, Sherry, Paul, I'm mentioning by names, I do apologize, Downmore, North Capital, Rialto, Justly Markets, NetShares, Wealthware, everybody's been looking forward to this because this is the chapter where we can actually provide a different narrative so the company doesn't have to be in a position where they prematurely go to market, where they can build it. And that's our next two speakers. I'm really excited. You've seen them before. And again, we close most of the event with secondary market trading because this is the final door that opens when a company needs to, first you raise it, you're going live, boom. Now the deal has closed. You have all these thousands of new shareholders, which they're there, but now we have a venue for them to monetize. So Karan, Lee, the floor is yours, gentlemen.
Thanks, you. Oscar. Thank you, Oscar. Hey, Lee, good to see you.
Hi, Karan. Good to see you as well.
Yeah, how are you doing? Hey.
Back in the saddle.
Very good, very good. It's amazing. Since we last spoke, I mean, who would have thought the cannabis market would have taken off, so much? And what's really funny about this one is that, when people invest like a couple of $1 million in getting a license to operate a cannabis business, now here's the interesting thing. Apparently, some of these licenses are actually being sold on the secondary market, just the licenses themselves, right? So, here we are talking about, what happens when investors come in and, shareholders in secondary markets, but they've already started doing that on the front end of it, on the deal side, which is really, hilarious. And, this happened with, it continues to happen with taxi cabs, the tokens and stuff like that. But I don't know, were you aware that there's a secondary market for cannabis licenses?
I had no idea, but as long as they're classified as a Reg A, CFD, we'll take them.
That's
we'll
right.
on the platform.
That's exactly right. Very good. Yeah. I can't help thinking that, people talk about the secondary markets and liquidity and so on. And, do you feel that, do you see sometimes CEOs saying, well, that's a great benefit for the investors, and the shareholders, but why is it so critical for us? Do you ever hear that? And, how would you, kind of respond to it? What are some thoughts on that one?
When you say critical for us, who are you referring to?
As for shareholders, but is it critical for the management? What's the value add for the management themselves?
Sure. Yeah, no, it's a great question. I mean, obviously there's quite a few reasons and more are showing up. But, as far as management goes, a lot of times, when you're with a smaller company, you're using shares as a form of compensation. And, this is just one, I'm not ranking these in any way, shape or form, but, if you have an employee stock ownership plan, you would, add shares as compensation. And, companies nowadays, used to stay private for so much longer. So,
Right.
The horizon used to be 1 to 3, maybe 4 years before you, started raising capital and went public. Those numbers are now in the 5, 6, 8, 10, 12, 15 and never range. So,
Right.
so those partners, those I guess employees have now can never have the option or have limited options to exercise those shares. So I think there is a drift, and we've heard it from multiple companies where, they want to start factoring this all into their compensation program. And again, there's life events, right? If you joined a company when you're 23, 25, and now you're there 10 years later, maybe you got married, maybe you decided to have children, maybe there's a college payment, maybe there's, you wanted to buy a home, whatever it is that now you could maybe realize some of that compensation in the form of shares. I think there are shareholders that may want to access more. So they hit it on the primary market and now they want to get their hands on more. Maybe the issuing company wants to actually diversify their shareholders. So now it's open and accessible to everyone. Again, anyone that can pass AML KYC, of course.
Yeah, that is absolutely the critical point. I was thinking the same thing too. There are a lot of these wonderful benefits we talked about for the employees, the early investors to become liquid if they ever wanted to, because of life-changing events, not because they fell out of love with the company, right? They can sell part of their holdings. But the other really interesting thing is just getting new shareholders, new viewpoints, new trends, expanding this to, the whole diversity that you talked about, right? I mean, I think that's really critical. It's one of those, things that, the big companies in the public markets benefit. And here we are. I mean, secondary trading now is, it's live, it's alive, it's active, it's here. There's nothing preventing anyone from doing it now, isn't it?
Agreed. And I think it's not widely understood. And actually, I think a lot of times when people invest in private companies, I think they automatically think or thought that a secondary market was there and the ability to buy more or sell their existing position. And it was there theoretically, right? You could contact the issuer and maybe try to find, a buyer, or I don't know, put your shares out there somewhere else. But as a regulated ATS by the SEC and FINRA, you would now have a regulated venue to do this matching, which is absolutely fantastic, right? We as Rialto also provide the on-ramp, right? The primary market. You can, get access to these great shares. And again, since the Jobs Act of 2012, you have RegA, you have CF, you've got some really interesting companies that are that you now have access to, but you also have the ability to exercise those now. Before you had to sit on them and just hope for the best. Hopefully they get taken out, acquired, or went IPO. And that doesn't always happen right away or ever. So in this market now, you can realize these again through in a regulated fashion. It's not a fly by night, stand up, just something that was just originated because somebody stood up a website.
Exactly. Oh God, yeah.
This has the full protection of the SEC behind it. So,
absolutely,
it invokes confidence.
Yeah, people get scared about the whole word regulated, right? And we have seen in the ICO market, the people who invested in those coins are people who were afraid of regulation or had a philosophical issue with it, right? But the moment the scams took place, well, they just ran back to the regulator, said, hey, help, get me my money back, right? So how ironic is that? And, I can't help thinking that for most people that we interact with, I mean, you do and I do, and, all of us, we do with some of our investors of our companies here, most of them really are worried about safety of their investment, right? They're not afraid of regulation, but I have to believe that they think it's a lot of bureaucratic nightmare probably, and maybe that worries some people about the secondary markets, but that's not necessarily true. You mentioned, the other day we were having a conversation and you said something fantastic. I mean, it's like you use the word fluidity. People say liquidity, but there's also fluidity to this, right? Once that's there, don't you think that, people don't get so worried about being regulated? It's actually good in many senses of the word, isn't it?
For sure, yeah, and like the bureaucratic nightmare you and I have experienced, and hopefully taken that out of the system. We've provided that fluidity of trading, and I think that's the other half of the magic. Again, being able to invest in these exciting companies, but also being able to trade these exciting companies. And if you missed it in the primary, you can still get it in the secondary, or you can sell your position, that you got from the primary. And I think that's fantastic. The fluidity piece is interesting, right? Because as you mentioned, and I think it's a very appropriate term for where we are in private markets, right? I mean, if you have 1,000 shareholders, I don't think you can say there's going to be a lot of liquidity 24 hours a day. What you can say is that, great, I have 1,000 shareholders and, they are representing my company, but, you could do what they call a point in time cross, where you call it and say, okay, hey, listen, my 1,000 shareholders, on, I don't know, July 7th, we're going to do a cross between, 9 a.m. and 10 a.m. Eastern time. So, aggregate your liquidity at that point, so that you get the best opportunity to match the buyers and the sellers during a particular time. Otherwise, with a limited amount of shareholders, you're going to have this, two ships crossing in the night problem, where, I put my order in last Thursday, but it never crossed. But there was another one in there, the other day. You can just aggregate that liquidity. Now, if you have 50,000 or 100,000 investors,
right,
that's a different story, right? So I think you have to think about liquidity profiles and individually as a company. And again, those are things that we can work out with everyone. But the fluidity concept I think is great, because we can move it from end to end, using the mechanisms that you and I have painstakingly built out over time to provide that ease of use and limited friction. Accessibility.
Oh, absolutely. And a lot of people who do come into these kinds of markets, right? I mean, the private, trading markets, they come with a mindset of, hey, it should be like the public markets. But I think, and, I've done a lot of trading in the public markets myself, and, many, many years. And even in the public markets, the true 24/7 liquidity really doesn't exist, right? there's only a handful of really large companies where you might say, millions of shares change hands every day or every hour. But even in the Fortune 500, even the Fortune 2000 or something, Forbes, 5,000, whatever they call it, there are many, many companies out there that just don't have that amount of liquidity, right? So I think it's a little bit overblown, I think. But the fluidity, I can really relate to that one. I'll tell you why. Because way back in 1982, I did my very first stock market trade. But right, 1982, paper certificates, right?
I wasn't born yet. I don't know. I'm kidding. I was.
That's my gray hair. Yeah. No, seriously. And that was in the public markets, by the way. It's a listed public market. And I was, just in my very first year in undergrad, I bought my first stock certificate. I had to write a check. It took, several days to clear. And then I had to go to a stockbroker, get the stock certificate. And about a few weeks later, I sold it for a nice, handsome profit, thankfully. But I had to go through the same, system. I mean, I had to go back, physically deliver the certificate. And, it took 5 or 6 days for that to be matched by somebody. And then it came back. I mean, it's amazing. And now I can go on my phone, right? I can buy one of the public stocks for 5 seconds confirmation. Boom, I get it, right? It's but that's what is actually now possible. The fluidity is there now, isn't it?
It's all there. And a lot has to happen in between there, right? I mean, we talk about onboarding, like AML, KYC for every investor that of that issuing company. And that has to be a rigid process, to make sure that, your shareholders are who they say they are, and that they, and that they can participate in this. The payment rails are a big deal. Back then, like you said, you have to write checks. There are folks right now that have never written a check and have participated in the world quite well. Right. Now we even have, exciting future payment rails with, I'm sure people have talked about CBDCs and stable coins and all that other kind of stuff. It's not quite here yet, but it's coming, pretty quickly. And then obviously, the unique nature, you guys leveraging the Hyperledger and being able to store that on a blockchain and being able to interact with that permanently and seeing how in facilitating those flows, it just makes the world go round a little bit easier. Now, that's not to say that we have it all 100% figured out. There's always a way to tweak or improve something, which we're constantly doing.
Always, continuously.
But we've taken a lot of the friction out, and even out of existing trading that you see, in the listed companies. And one thing you mentioned too, just back to the liquidity question, is comment. There are a lot of companies that are listed on the major exchanges, and they get zero volume or almost no volume, and they pay a fair penny to be listed up there and to keep their status on those. That's so, right. It's not necessarily, I went IPO and now I'm on the big boards. That doesn't guarantee you liquidity, but I think everybody has these ideas of everything being Apple or Microsoft or Google or Amazon or something, which are liquid, like beyond belief. But not everything's like that.
Yeah, no, absolutely. and you mentioned the payment rails, and it takes a lot to make these markets fluid. I mean, you and I, we have been on this path for quite some time now, and we have seen. I mean, how many obstacles we have had to remove just to make all this really fluid, right? And it's unbelievable. One thing I just want to emphasize too is that fluidity does and should not, and we know this, we are on the same page on this one. It should not sacrifice any safety, any security, or any form of compliance. I mean, that is, there's no controversy around that piece, right? It's non-negotiable. So all of that has to be done. And you mentioned this, right? Onboarding. And today, there is a very, very smooth process for onboarding. We know exactly what it takes to onboard investors into the secondary markets. The other part of that, of course, is all of the trust. Who do you trust? And it's unbelievable, but in a lot of the public blockchains, you just don't know who is on the other side of the trade. Is anybody with some fiscal responsibility, guaranteeing the trade or overseeing trade? Is there any governance around it? All of that. I mean, you and I and several of our friends who have been on a common crusade to ensure that there's a fluid infrastructure of trust. And you mentioned the Hyperledger Fabric as a permission blockchain, but that's what we are all about, right? And once they, their identities and everything are verified and locked, the transactions are locked, it's immutable. No one can question that. No one party, neither ourselves or yourselves or any of our people, they just can't go there and massage those numbers anyway. I mean, it's totally auditable, it's immutable, right? So there's so many ways to think about what it takes to make a secondary market infrastructure like this truly ready, isn't it?
There's a lot of moving parts, and hopefully we've done our jobs well, right, to blur all of the heavy lifting behind the scenes. But like you were saying, fluidity doesn't come at the expense of compliance. They're tightly joined, right? That fluidity that we're talking about is a compliant, fluid manner, and it's been painstakingly a deliberate, delicate dance that has to be followed per regulations. So there's a cadence to when we check certain things and when we notify of certain transactions that have occurred, when payments have been received, and then asking for shares to be moved on the ledger. So there's that process that just needs to be followed each and every time. And that's why we have guys like Jim Caboy, who was on the previous thing. He calls himself the wet blanket, and because he's always the one that has to keep everything rigid, make sure that we never step out of bounds, and doing tests and checking to make sure that it's always following that fluid process, that fluid yet regulated or compliant process.
Oh, I wouldn't call him a wet blanket at all, at least not to his face. I mean, he's like the fence that keeps us off the cliff, falling off the cliff, right? I mean, that's how I say. I'm
just teasing him. He's a great guy.
He's a great guy. Yeah, he's I mean, as we all have been engineering this stuff, I mean, he and, his colleagues have been coming forward and giving us so many ideas for improvement and how we can tighten the ship here and there. Not that the ship was loose to begin with, but just to kind of make sure that, we put in extra protections, we all perform our due diligence. So it's absolutely fantastic. I mean, it's really come a long way. Lee, I mean, I feel, people may not realize this, but this is there, it's alive. This is not hypothetical, right? This is still not drawing board, hey, we're still drawing up the plans, we're just, blowing smoke, and, it's not the sizzle. The steak is there for consumption now. So I think, so having said that, how do you feel, companies and CEOs should be getting ready? What can they do to say, yes, let's seize this? Because it gives everybody a bigger stake in becoming shareholders in our company. It expands, it makes everything much more, our offering more valuable and desirable because of all these other secondary characteristics. I'm just thinking through the process of what it would take, what they need, what steps they need to take to just kind of get on board and take advantage of all this.
Sure. Yeah, that's a great question. There's a lot of things to factor in, and I was on a panel earlier, talking about what to consider with the lawyers and investment banks, and there's a lot for a primary issuer to consider, when they go down this path, right? And that's fine. You should, because you're playing in a regulated market. But secondary trading should be in the back of your mind too, right? That should be a seed from the start to say, okay, will we consider allowing these shares to be traded on an ATS? So yes, we would, and I'm assuming there, right? But you need to start making those movements now, right? You're working on your capital raise, and then you let's assume you get your Reg A, you get your $30 million, and now you're ready to go. in the meantime, we could be progressing towards a secondary market solution, again, for your shareholders, provide liquidity to your employees, to access a diversified shareholder base, so on and so forth. So I think, again, start early thinking about it. If you've already done your capital raise and you might want to provide this benefit to your shareholders, after the fact. So it doesn't mean that you don't have to do it at the primary raise or make any decisions. You can do this well after the fact. So even if you're seasoned and you've been in seasoning, I mean, the shares have already passed their maturity phase where they can start secondary trading. They can come in and list, and again, looking and partnering with forward-thinking transfer agents like yourselves that allow for secondary trading. Boom, we're off to the races, right? I mean, we can start facilitating this quickly.
Oh, absolutely. And as I myself and many of my colleagues and you too, I'm sure, when we have traded a lot, I've traded quite a bit. And I was in touch with the Chicago traders and flow traders and people like that. And one of them actually said something that I'll never forget. He said, Kiran, the difference between a professional, an investor who actually makes money versus a retail investor who just simply jumps in and does something. The big difference there is, it's not whether they're accredited or not, whether they're rich or not. That's not the key distinction. The real distinction is that the person who makes money is savvy, is a person who gets into a deal, buys an investment or something but they plan when they have to exit or when they think they should exit. They have an exit strategy in mind already. And they might hold it, buy and hold it forever. That's a different issue. But at least they have a strategy in mind, right? So I think, I would have said, hey, with the secondary markets away, now we have all this filings and everything ready and, to go. In the private markets, retail traders, just because it's open up to them, they need to now start thinking, in a much more sophisticated way about, hey, what is my exit going to be like? What can I really do with all this, right? I mean, that's kind of how that's why I think all this is like really timely.
Well, to your exit strategy comment, right? I think it's absolutely imperative that folks think about that, at least have a plan in their head. When you go to invest in something, what's your number? What's your figure? Like what's the math that you've run to say, I'm out of this? Now, if you just go back a year, there was no exit strategy. You had to sit on it and hope for the best. I mean, think about, it's kind of fascinating that it didn't exist, that you couldn't exercise or get out of this, or get more of it if you wanted to. It was a one and done deal. Cross your fingers. And that was it. Now we have this, and again, I call it the other half of the yin and yang here. It's the secondary market. Now you have a fluid opportunity here to really see the full life cycle of your investment. So
I think it's even more important for cannabis, Lee. I echo your words. I would say that, look, as an entrepreneur, we were always put up on a wall. It's either you get acquired or you go public, right? These were like A or B. So you're under pressure, as a company. If you're not venture back, when you're venture back, they don't ask that. You're in a road path for something, right? Mm-hmm. But when you're not, you're constantly being asked that. And A or B. And as an entrepreneur, you're going, I'm not ready to be public. So that's A. But you're always in the back of your mind, you're thinking of your shareholders. And I look at cannabis like blockchain and mining, and I'm talking traditional mining, like gold and all that. And I look at it that way because I see people coming in and coming out and they take things public and all that. I prefer this because for those companies, the 99 percentiles that want to build something, they can now give something. To your point, you're not under the pressure. What you're providing the investor is a vehicle for monetization. That vehicle for monetization did not exist before. The regulations were there. That was the first step. Boom, kudos, great. But it took everyone else time. And now that door's open, as we all did in June, to bring that to the market. And I think for the cannabis sector, I think it's even vitally more important because it's almost treated like mining. I'm not kidding you. every single time I talk to a cannabis company, they're doing a capital raise, 50, 75 million. And I go, so, what's next? Are you going to do it? No, we're just going to go public. I'm going, but you haven't even built out your revenue. Oh, no, we're going to do a TSXV in Canada. And I'm like, so where's the value in that, right? Because you're going to get the bump, but eventually you got all this exposure that you don't need when you're still building your business. And that's why I like this. This is probably one of the best vehicles we have ever had in the private markets that doesn't force us to do things we're just not ready for yet. And when the time is there, wouldn't it be great to be $1 billion company rather than a $1 million company? I'm going to share this story with you because the parallels to this are amazing. When we were starting, that's exactly what happened to us. We got our first couple $1 million. My shareholders were knocking on my door. Oscar, we have a CPC for you, because they knew we needed more capital. You heard that before, right? And instead they took another company, and I applauded them for it. I didn't. We voted not to, and I'm glad we didn't. I watched this company. I have been monitoring them since day one. They went out at 75 cents. It was rah, 75 to $1.25 to $1.50, rah. And then it dipped out a little bit. It did a little work, and voila, all the way down. It's been sitting at 10 cents and has never been able to climb up since then. And the company's great. There's nothing wrong with the company. Absolutely nothing. The company is fantastic. It's a tech play. It's got revenues. It's almost near cash flow positive, but it's still with a valuation not even close to what it would be if it was a privately held company building its business rather than focused on its public stock. And I think that's what I'm excited about, Lee, about secondary market trading. I heard Yoel present to a company talking about where you can have things like where you invite everyone for a day. There's a name for it, like like one day from 5 p.m. to 9 p.m. you're able to sell your shares, right? And I thought, well, you can't do that with a public company. No. The exchange is open, from 9 a.m. till 5 p.m. And here, the secondary market can be very flexible for the company. I'm raising capital at this time. Okay, we will turn it off. Why? Because you don't want to compete with yourself. I think that if you're a CEO of a company, you need to embrace that.
That has to be exciting. Forget about embracing it. That has to be, come on, that's like a marketing event, isn't it?
No, it is. And I can't recall the name that he used and to describe it, but it made so much sense, like an auction. He said like an auction.
Flea market auction, yeah.
Yeah, well, not flea market, but what you're doing is creating a sense of a period of time where you allow, and these are not words you often hear from an exchange, right? And obviously that's what's called an ATS. So I think that every CEO needs to have that exploration with their ATS provider secondary market, because obviously there's more now, which is fantastic for all of us, for the entire ecosystem. There'll never be just one. There'll be many. And that is just the nature of the beast. There are many broker dealers. They're all great. They're all going to do a wonderful job. The key is that we understand that it's evolving. And the most important part is that their companies don't need to take that other leap in order to be successful. There's other ways. And I know there are some hard-nosed individuals. I hope I used that word correctly. I apologize. Mi español, una veces, it comes out a bit. And that is that it's time for a change to look at doing things differently. Being a Canadian, I for a lot of you probably didn't even know that my roots to this came from corporate governance and compliance. So when 2002, when Enron collapsed, everybody remember that? When Enron collapsed, the big headlines were, where were the board of directors, right? Everybody was wondering, where were they?
I remember
nowhere to be found. So the regulators made changes to make sure that would never happen again. Of course, there's going to be issues, but obviously not like those. But what I did learn though in those days is that the public market, it really didn't change anything. People had to do it because they had to do it. And the other thing that I noticed is that it was always, there was the TSX, NASDAQ, and NYSE. Everything else was just kind of like, we need those kind of markets, but do we really need them now? I mean, that's where I'm now questioning whether that venture market that existed, do I think it's worth it? For some companies that, I can't speak for all of them, but for some that don't have much of anything and they need just to use news releases to pump, great. But for the legitimate companies that are building, my advice, this is just from one entrepreneur to the other, build your business, get that revenue, prove it to people that your business is legit, and use a secondary market ATS to do so. Lee, Corinne, guys, as always, the two of you, and Lee, thank you for coming in this afternoon. Your colleagues owe you a big one for that one, huh?
Taking a steak dinner or something.
Oh, at the very least, a steak dinner. At the very
good.
least, a steak dinner. So thank you so much, gentlemen, for helping out today. And so basically what's happening right now, everyone, I'm going to, obviously, I'm thankful to everyone today, this afternoon, for being at our KoreSummit webinar series 2021. Thank you, all of you, for staying in. And obviously, this is being recorded and it's going to be available to everyone who registered. And we still have a few more KoreSummits yet for 2021. We have digital securities. It's going to be exciting, a whole bunch of new speakers. And then the collectibles. Now, we're still waiting on some fine print here on the SEC. We hope that, and then, of course, we're going to finish the year off with Dare to Dream. Yes, Dare to Dream. We're bringing all our core partners, our wonderful ecosystem, for you to meet them all, to talk about Regulation CF, Regulation A, as we start 2022 with an amazing kickoff. Thank you again, everyone. Have a wonderful afternoon. Looking forward to seeing